All right, team. Today we've got Apple earnings. We got Apple, Google, and Amazon earnings today, man. Apple at right under 150s. What's up, Mac? What's up, Vincent? FPV, what's up, man? Yeah, Apple earnings, Amazon earnings, Google earnings all today. Kind of a crazy day, man. Hey, what's up, Shadow, Manuel, Trader, Steve, Thomas? Can y'all hear the music? You should be able to, but let me make sure. All right, we're gonna do a poll like we always do. Bear with me here, team. Let me make sure. Let's see what we get. So y'all haven't been able to hear the music at all, right? Yeah, so I think today's actually Apple quarter one earnings. They have stocks have different fiscal years, but okay, good. Yeah, so Amazon earnings are going to be Amazon quarter four, Google is quarter four, Apple is quarter one. Is how it is. All right, team. Yeah, so you can see everything kind of turning down here. I haven't really traded since this morning, but you can kind of see the market starting to turn a little bit. Uh, like an acapella. All right, we'll get some music here. Hold on one second. Let's do a poll here. We haven't done a poll yet. All right. So bull or bear on Apple quarter one earnings. Vote in the poll, bull or bear. We got the poll live. We're also going to do a Twitter poll here, like we always do for each of these stocks. All right, team. All right, so we're getting the poll ready on Twitter. All right, do me a favor, hit that like button while you're here. If you haven't yet, we appreciate it. All right, so we got our Apple poll live on YouTube already. All right, and we're going to get the music started here. Let me know if you can hear the music now. You should be able to. But yeah, vote on that poll, and then we're gonna basically just do another one for Amazon. Yeah, vote on that poll, and then we're gonna basically just do another one for Amazon. Yeah, vote on that poll, and then we're gonna basically just do another. There we go. Sorry for the echo. I fixed it. All right, so we're doing our Amazon poll as well. Vote on each of these. They're both only going to be a couple hours that they're live. And so vote on this poll. We got the Amazon poll up, and now we just got to do Google, and we're good to go. Spelled there wrong. My bad, team. Yep. Guess we could also tag Alphabet, which is the parent company. All right, team. So we already got over 100 people here. And we got each of these polls live on Twitter if you want to vote, you know, kind of in a different way. All right, so we got each of these about 50-50 split on the Aapl poll numbers. I'm actually super happy with today's action. Main point, 3.5% NASDAQ chips did not rally, and I was short in positions there. Entered at the highest point in the nice. Best channel by far for events, earnings, and anything. Hey, thank you, man. We appreciate you, bro. This is crazy action today. Yeah, man. Honestly, the whole market's crazy right now, bro. The whole market's going to be crazy. We got a lot of stuff happening today. Tesla just dumped it. Tesla didn't really crash. It just gave back all its gains from today. Tesla, believe it or not, is still pretty green on the day here, I believe. Let me look at where the previous close is. But I'm pretty sure Tesla is still super green on the day. Not super green, but Tesla is still technically green on the day. Apple is still technically green on the day, and Amazon are all three of these are technically green right now. Hey, what's up, JF? All right, team. So all right, so my eyes are feeling better too, man. I think I was just getting off the prednisone eye drops that I was on. Let's go ahead and get everybody ready. And the schedule for all these, man, this should be a crazy day, to be honest here. We just got so much stuff. Apple's supposed to drop theirs at 4:30. Amazon at 4, Google at 4, Ford at 4:05. So QCOM at 4, Starbucks. So, you know, Apple's reporting theirs a little bit later, but that's okay because we're going to cover all this stuff. Amazon's starting to bounce back. Apple's still red on the day. Kind of a choppy day heading into this. This is a big market catalyst today, man. We got a lot of people reacting to this. A lot of traders are going to be into this today. So earnings are coming out in about 45 minutes. We get Google and Amazon earnings, and then Apple earnings are going to be out at about 5 or about 4:30 market time. And if you follow us on Twitter at Beginner Trades, we got each of these polls going live. All right, so we're gonna have to run a custom banner here so we can kind of follow up on everything. All right, so they're going to be coming out at 4 p.m. Eastern Standard Time. All right, team. So, look at these, man. So again, Apple started to bounce back a little bit. Amazon started to bounce back too. So we are seeing some positive action here. Tesla's still pretty down on the day. We have Google sitting at 107 right now. Very choppy sideways range ahead of this. A lot of people are just anticipating the earnings reports coming out, so they're not really taking any big size positions. Yeah, Amazon is 4 p.m. Yeah, so Amazon, they're all after 4 p.m. We need a timer. Hey, I got you. So all of these are basically going to be out in about 43 minutes. So we're just going to make it 43 minutes. A little bit under that. We'll make it 42:30. There we go. All right. We got the timer on the right. The market's not really down on the day, man. It's just sideways. You know, the markets are actually still very green. Again, Amazon, just to show you guys this, Amazon's still green on the day. Apple's very green on the day. Google, very green on the day. You know, so like here's the previous closing price, the red to green level. And so all three of these are still pretty green on the day. It's a pretty green day. I thought we'd probably correct some, but market looks to be more choppy. There's not really any real trend or edge, I think. But yeah, sideways day for the most part, although stuff's starting to pump back up a little bit. Google back over the volume weighted average price. Amazon over the VWAP, testing the 200 EMA. Apple still below the VWAP, but, you know, still pretty green on the day still. So right now we got a slight upward trend, but it's mostly sideways, especially with like Google is very sideways. Amazon is slightly green. Apple slightly green. Looking at our poll number so far, we got 133 votes. 59% are bullish, 41% are bearish. We got a bunch of votes already. Apple, 7 minutes. We've got about 38% saying call options, 62% saying put options. On Amazon, 53. And Amazon, 47% call options, 53% put options. And then 50-50 split on Google. So we'll see. Give your boy a follow if you can. Look at Amazon pump here ahead of this. So Amazon up to 112s right now. Apple at just under 149.50, and then Google at almost 108. So Google looks pretty strong here too. That was mostly sideways pawn. There wasn't really, I mean, there was a big pump up for Amazon at 113. If we look at the actual like SPY here, for instance, the market went up to 418s, but it's still a pretty sideways day after the opening bell. Like it's a big range day. If you look at the range here, we got the lows of market hours, and then we got the high of market hours. And so it's a big range day. The range is from 418.30s all the way down to 413. So it's about a 31-cent range on the SPY after the opening bell. So, you know, or no, I'm sorry, that's way off. It is about a $5.30 range on the SPY on the day, which is a big range. But regardless of how big the range is, it's still pretty neutral as a whole today. You know, we went down, we went up for a little bit, held an upward trend, and then pulled back, and now we're back up again. So it's kind of like a head and shoulders here, where we could see something like this. You know, you could see something where it continues up. You know, basically a guess at this point in time. We appreciate the love. All right, so Meta is up 100%. All right, so hey, we're getting some strength right now. We still got 40 minutes before the earnings come out, about 40 minutes. Hey, what's up, Jody? U.S. mortgages rates decline for the fourth straight week, hitting 6.09%. Gosh, man. All right, so yeah, SPY up, Apple starting to test 149.50s. Jody says punch and pray. Do you think buyback is what saved Meta? Well, I mean, I think Meta had positive guidance, so the guidance weren't bad for Meta. The guidance was solid for Meta. So Meta had better than expected guidance, better than expected revenue, EPS that was lower than expected. But I think with all the other positives, especially with the 40 billion buyback, I think it's fine. Now who knows what it would have done if they didn't do the buyback, but I still think that you could still argue a positive reaction even if they didn't have the buyback. So I don't know if I'd blame it fully on the buyback, but I think the buyback certainly helped. Tesla's dropping a lot today. I mean, that's certainly... Snapchat looks pretty strong relative to everything else too. But yeah, Tesla started to turn. Market was pretty green, maintaining a really nice upward trend. Tesla almost hit 200 today, got up to 197s basically, at 187s now, and then started to kind of turn a little bit later on. But if you look at like Walmart had a pretty red day. Target was neutral. Got about 200 votes. Vote on the poll, guys. Hit the like button as well. Help me hit 100 likes real quick if we can. All right, guys. So again, Amazon at 112.30s, 112.30s, Apple at 149.50s, SPY at 415.15s. I wonder if the company reporting today do a buyback. Maybe. It's certainly possible. Timer for each is useful. Well, I mean, they all mostly report after 4. So like, just to give you the full schedule here, just so you guys understand, Amazon is right at 4 p.m. on the dot. Amazon's going to drop their earnings. We're going to cover it as soon as it happens. Hit the subscribe button. We'll stream the full thing live, so you'll be able to watch exactly. We'll report on exactly what they drop, as well as the other nuance, the rest of the nuance from their earnings report as soon as they drop it at 4 p.m. And then Google is also at 4. So GOGL, Google, is also at 4. They're expecting 114, and we'll go ahead and put the expectational numbers on screen too, so you can kind of see what everybody's expecting for these stocks. But Apple, these are mammoth earnings reports. Apple is expecting 193 EPS profit on 122.05 billion in rev. Amazon is expecting 15-cent profit EPS on 145.4 billion in rev, and Google is expecting, or Alphabet is expecting $1.14 per share in EPS on 76.6 billion in revenue. We'll put this data up on the screen so you guys can check it out. That is the full list of what to expect here. We appreciate it. All right. Yeah, Thomas. I mean, we're still pretty early here, bro. Like, I'll put it this way: we're gonna have thousands of people here after 4 p.m. You know, there'll be thousands of people here. The likes will get bumped up to, you know, my guess is like 400 or 500 likes. We'll probably get over 1,000 votes. So I mean, you know, we'll get there. I didn't bring any drink today, man. I should have brought something. What's up, MA? Hey, thank you, man. Looking at the numbers here, we got about 60% saying bull, 40% saying bear. Looking at our Twitter votes here, and we got a bunch of Twitter votes. So far, we're about 41% saying call options on Alphabet, about 59% saying put options. On Amazon, we have 56% saying call options and 44% saying put options. On Apple, we have 43% saying call options and 57% saying put options. And so it looks like bearish on Apple in terms of sentiment from votes, bullish on Amazon in terms of sentiment from votes, and bearish on Google and Alphabet according to sentiment from votes. That's what we got so far. Amazon, pull it back to the 200 EMA. You can see Apple rejecting right at that level now. It's right at 149.80 for Apple here. So starting to move a little bit. See if they continue to go up. Yeah, I stopped using my artificial tears. All right, we're going to go ahead and send a newsletter out like we always do, team. If you haven't already, check it out. We're going to send our newsletter out. Slowly building that newsletter source here. We're going, and we got 500 emails here that we send newsletters out to every day. That's growing pretty nicely too. So, hey, if you haven't already, join our newsletter service. It's completely free. It doesn't cost a penny. And yeah, check it out here. We're also going to get ready to send this newsletter out. So if you haven't already, check it out. Should be fun here. Amazon up to 112.20s. 112.20s for Amazon. Big day, man. It's arguable that this might influence the market more so than yesterday's Fed rate decision. It's arguable. Now, I'm not saying it will, but it's arguable. And again, this is a big report. Apple is the largest stock percentage in the S&P 500. And so the largest stock percentage is Apple. All right, team. Sending our newsletter out now. Hit that subscribe button here. We still got about 30 minutes here, about 30 minutes, so we got time. But I'm ready. Look at that pop on Apple. Apple almost up to 150s here, guys. Almost up to 150s. So newsletter sent out. We got that thing live. $29 minutes. Yeah. Report comes out at 4 p.m. Eastern Standard Time. Still got 30 minutes before Amazon and Google earnings drop. Eyes feel better too, man. There's Apple pumping up at 150s right now. All right, no worries, Kyle. Yeah, this is going to be a big influence, guys. Like, this is going to move markets for sure. It's going to be a big move of markets here. Like, to put it into perspective, Apple's the largest percentage of the S&P 500. It's going to move the markets drastically, for sure. So Apple, easily the largest percentage of the S&P 500. Apple makes up, let me check just to give you the numbers. Apple makes up 7.1% of the S&P 500, right? So Apple does a big miss or a big beat, they are going to move markets for sure. Let me see what Apple is on the Q. All right, so the Apple percentage on the Q, Apple makes up 12% of the Q. So this will move stuff. SPY just popped over the previous closing price. Amazon over 112. So we got Apple up to almost 150. Just broke 150, or at least tapped it. Let's see if it gets up to 50. There it goes, over 150 now for Apple. Still steady pushing up here. Yeah, we'll cover all of them, Trent. So yeah, to put it into perspective, guys, we are going to cover Apple, Amazon, Google, Ford, Qualcomm, Starbucks, US Steel, Gilead, Skechers, MicroStrategy, and everything else. We got Bill.com, Clorox, Deckers, Microchip Tech, Columbia Sportswear, GoPro. We'll cover all this stuff, man. So we're going to tell you WWE drops today. So we're going to cover it all as soon as it drops. But Apple's going to be the biggest one for sure that we cover. Again, it makes up 7.1% of the S&P, about 12% of the Q. So it's a very large percentage stock of broad market ETFs, and it will swing markets, especially if it's something wildly unexpected, like beating expectations by a big margin or missing expectations by a big margin for that matter. So we'll see. No, Kyle. I don't even know what that is, bro. What is that, man? I don't even know what that is. I would never, you know. All right, guys, let's do this. All right, Amazon up to 112.20, SPY up to 415s, almost 416s. Yeah, so just to give you the graphs here for Amazon, let's show you guys. Let's talk about this for a second. To look at Amazon, I always like looking at the macro trends EPS graph, and this is by macrotrends.com. All right, macrotrends.com. It's really useful because you can kind of see a company's profitability drawn out. So here's quarterly what we generally look at, right? So Amazon has been profitable. This is Amazon, right? So yeah, here's Amazon. Last time Amazon reported about 28-cent profit per share. Time before that, they had a loss. In mid 22. Time before that, earlier they had a loss. Time before that, they had a big beat. It's one of the reasons, like if you look at Amazon's PE ratio right now, it's not great. You know, the PE ratio is what, like 90, $100 a share right now. So, you know, it's one of those things where it'll be really important for Amazon to look at this EPS graph to see what they do. The trailing 12 months EPS for Amazon is only about $1.08, right? So if we use that and then we calculate that by Amazon's price, this is how you calculate the PE ratio of anything, of any stock, is you take that, and we were looking at Meta's PE ratio now is around 20 something. But if you take that and you take that, well, what did it say the trailing PE was? It is about $1.08, right? So if we take the price of Amazon, which is about 112, and you divide it by $1 what was it? Let me see, make sure I get this right. $1.08. Then we get a PE ratio of about 103 right now for Amazon, which again shows that Amazon could be overextended on the upside. Doesn't necessarily mean it. Just like RSI is not a perfect extension indicator, neither is PE a perfect extension metric. But we can kind of look at it to see if it's cheap or expensive. If we do the same thing with Apple, let's keep looking at this, guy. So again, let's look at Apple now. We're going to look at the same chart, but we're going to look at Apple this time. All right, so here's Apple. We can look at Apple and go down and see that Apple has been performing noticeably better than, you know, Amazon. Apple, last EPS was 129. Time before that was 120. Time before that was 152. Time before that was 210. So Apple hasn't had a losing quarter in a long time. You know, since the last losing quarter for Apple was freaking 09. Or no, Apple, has Apple ever? Let me see. Their growth has been down. But anyways, to calculate the PE ratio, the yearly PE or the yearly EPS for Aapl currently is about $6.11, right? $6.11. Now you calculate that just to calculate the PE ratio, $6.11, you take 150 and you divide it by 611 and you get a PE ratio for Aapl of about 24, about 25, 24 and a half. That's not necessarily cheap, but it's not high either. It's not Amazon. Amazon's really overpriced. For the PE ratio, the PE ratio doesn't necessarily mean it's overpriced. It's all. I'm a real estate agent off and on. Not right now. I think my license is expired. But one of the things you always say is market value is only what somebody's willing to pay for it. And so, but a PE ratio under 30 is generally okay. If it's under 25, it's great. Not great, but if it's under 20, it's pretty solid. If it's over 30, it's not great. So if Amazon being over 100 is just not good. Google, let's take a look at Google here. Same thought process here. Google also reports their earnings. So let's look at the Google EPS graph, or Alphabet, I should say. So here is Alphabet with the same chart, same graph here. And Alphabet has had a very strong couple years here. This is since 2010. Alphabet hasn't had a losing quarter since 2017. The last EPS was 106. The trailing 12-month EPS is 504 for Google. So 504. So with that, we could take Google and say, okay, it's at 108.45, and then divide that. What did it say? The 12-month is 504. So the PE ratio for Google is better than all of these, which is right around 21 and a half. So we can call it 22. So pretty cheap PE ratio for Google. I mean, it's not Ford, but it's still pretty cheap. Meta's right around there as well. It's about the same what Meta is. So, not bad, guys. Not bad. We'll see what we get. Yeah, so Amazon, Google at 4 p.m. Top 3 most occasional real estate agents in the world right now. Yeah, no worries. Amazon, Apple, Google. Yeah. Hey, what's up, Jay? I think it's going to be high volatility chop, maybe. Yeah, they're announcing some in 25 minutes. I might trade it a little bit. We'll see. But yeah, let's keep the growth up, guys. I'm excited here, man. I'm excited. Amazon earnings, Google earnings, man. We got Apple earnings. The market will move. Tomorrow we have unemployment. We've got non-farm payroll data tomorrow as well. So a lot of stuff going on right now. Looking at our poll numbers here, we got about 300 votes. 60% are bullish, 40% are bearish. Looking at Twitter, we got some votes here on Twitter as well. Google, about 43% are call options, 57% are put options. And then Google has the lowest PE ratio out of all of them. Alphabet, that is. Amazon's got about 53% call options and 47% put option votes. And Apple has 45, 55 call puts. So let's see. Team and Bill. Bill.com, I use Bill.com with some of my affiliates. So Bill.com is still very used and arguably useful. I don't know enough about the company as a whole, but Bill.com is big enough to, they're expecting 13 cents a share. Decker Brands is expecting almost $10 a share for Decker. What's Team? Team is Atlassian Corporation. I don't know anything about them. All right, so getting a little dip here. Apple pulling back to the 149.90 level, 200 EMA. Yeah, man, Snap, man. Like I said, this is not the first time I made money on Snapchat like that either, bro. Like Snapchat's just been profitable for me. All right, we got about 15 minutes, guys. 15 minutes. Should be chaos, dude. I'm ready. I'm ready, man. We'll see what we get. Hopefully we get something favorable and positive. I want Apple to go up. Do you guys want Apple and Amazon and Google to have good earnings? I do. I hope they have good, profitable earnings. But we will see. What's crypto at right now? These tech earnings should affect crypto too. Oh yeah, for sure. Yeah, they're definitely going to influence crypto. You know, no question. Yeah, they're certainly going to move crypto for sure. How much is the question? But they're going to move everything. You know, they're going to move the S&P 500, which in turn will move crypto. They're also tech-related stocks, which have a little bit more of a connection to that type of stuff than, you know, just say your normal, you know, Walmart or whatever it is, right? So they're tech stocks too. So that's going to make stuff move a little bit more as well. So. All right, so one of 3M's largest investors has raised concerns about CEO Mike Roman's leadership and questioned whether a change may be needed. All right, so they announced the new schedule for World Series of Poker. All right, so Apple's still testing pretty sideways, guys. Again, we don't have that much time. We got less than 15 minutes before the earnings come out. I hope they're positive. I mean, I hope Apple comes in and beats the earnings expectations, but I'm not sure. Yeah, I mean, it's a good thing, to be honest. Bitcoin, it's good that it's even just testing 24K, to be honest, right now. I'm happy it's just testing 24K. All right, so Amazon has no. Well, they have some stuff in my area, man. That's theoretically a neutral reaction. And again, so Apple's expecting 193 EPS on 122.05 billion in revenue. Amazon is expecting 15-cent profit EPS on 145.4 billion in rev, and Alphabet's expecting 114 on 76.6 in rev. If they do what's expected here, do people usually base it off of guidance? Like theoretically, we should have a neutral reaction if it's as expected. And if that's the case, then again, theoretically, they should base it off of guidance in the future. You know, like for instance, Meta had mixed results. It had a positive revenue over expectations on revenue, but their EPS was lower than expected, but they still flew up because they announced better than expected guidance, higher than expected guidance, as well as a $40 billion share buyback program. So, you know, if they're as expected, they'll look at other metrics to determine which should happen. And again, maybe we just get a neutral reaction. It's possible too. Earnings come out. There's a timer on the top left of the screen. It's got about 13 minutes before Google and Amazon. And then after that, Apple releases theirs at 4:30. 13 minutes. Yeah, today's a crazy day, man. Yesterday was crazy. The day before that, this is probably one of the crazier weeks, and the market has responded overwhelmingly bullish on this stuff, man. So it's one of the crazier weeks in market history, to be honest. Again, I cover all the big earnings, and today's different because today it all falls on one day. So like earnings all drop. Google, Amazon, Apple all drop on one day. It's not just those either. They, for whatever reason, they decided to all schedule their earnings same day, which I'm a little disappointed about because we cover each of them, but it does get it out the way. So today, again, we've got Apple, Amazon, Google, Ford, QCOM, Starbucks, US Steel, Gilead, Skechers, MicroStrategy, Deckers, Bill.com, Clorox, Boyd Gaming, Leslie's, Atlassian, Columbia Sportswear, Microchip Tech, GoPro, Dolby, and a bunch of other ones today. WWE. So there's just a lot of different earnings reports coming out today. They scheduled them all on the same day, which is different. It's not usually how they do it. And so what we're going to get today is a lot of volatility from earnings season. A lot of volatility. This is going to be the most volatile earnings day of the entire quarter. That's the thing to understand. So this is going to be the biggest mover of markets over the entire quarter. You know, so we're not going to get anything until anything like this until like March, April. In terms of earnings, it's just a big earnings day. And so again, whenever we have big days in market activity, generally we get sideways movement. And again, if you look at Amazon, it gapped up today, but since the opening bell, it's been neutral. Apple, same thing. It gapped up today, but since the opening bell, it's been neutral. Google, same thing. Gapped up today, but since the opening bell, it's been neutral. So, you know, but it also is a risk. It could do something where they just kind of like, where they all come in below expectations and the market just kind of, you know, just tanks. Like that's possible too. Nobody wants that, but it's possible. You know, it's all the same day. Yeah, so this week has been one of the crazier weeks. We had the rate hike decision yesterday. We've got unemployment tomorrow. We've got non-farm payrolls data tomorrow. Today we have Google, Amazon, Apple, you know, QCOM, Starbucks, US Steel, Skechers, and a lot of other ones too. And so it's like we got a bunch of earnings consolidated to one day of the week. The rest of the days this week have been absolutely ridiculous. We've had the rate hike decision and press conference yesterday where we had like 4,000 people here. We got like 20-something thousand views. Yesterday, the channel as a whole got like 70,000 or something like that in terms of live stream viewers, 60 maybe, I don't know, something like that. But it's been a big day for market catalysts, man. It's been a big week for market catalysts. And so, hey, hit that subscribe button. Yeah, it's the Super Bowl of earnings today, basically, to put it into perspective. All right, team. Yeah, today. Market is ignoring all factors, and maybe not. I mean, I don't think so, Striker. I think there's a lot of confirmation bias, and like I think people who want the market to crash, or people who are betting that the market's going to crash, or people who are holding put options or holding big short positions, I think they hear what they want to hear. You know, like yesterday, I had a lot of people being like, "Oh, what Jerome Powell said was super bearish," and I would talk to him about it, and I'd be like, "Well, look, he said that Jerome Powell said that he was super confident, super optimistic." That he saw inflation getting better over the next quarter, and a bunch of other positive things that the market overwhelmingly reacted positive to. But yeah, he said some things like he doesn't know if he thinks they're going to pivot this year or not, that they're still waiting, that could change. And so he said some potentially negative things too, but it was overwhelmingly positive in my opinion, what he said yesterday. But still, you know, short bias people who want to confirm what they already want to happen, or like, oh, he said it was so negative, and it really wasn't. It wasn't super negative at all. I mean, you could dissect small little pieces and pockets of negativity and interpret them however you want to interpret them. But I thought it was positive. The market thought it was positive. And then the rate hike was 25 basis points as expected. So overall, it wasn't a bad rate hike decision and press conference, and the market reacted again overwhelmingly positive to it. But again, there's a lot of confirmation bias in the stock market. Like people who are betting the market's going to crash, of course, they're going to find the negative, and people who are betting that the market's going to go up are going to find the positive, I guess. Yeah, 100%. And then today was even weirder, where today we had the jobless claims report come out, and I posted this to my Twitter page, and we talked about this. We said, hey, what we said was that today lower jobless claims equal to positive market reaction, lesser factory orders equal to negative market reaction, and so we may finally be pushing towards a more recession-fearing market. And if it is recession-fearing, that means unemployment low is great, and that's going to make the market go up. If it's an inflation-fearing market, that means that they want higher unemployment, right? So it looks like maybe we've changed to a more recession-fearing market right now, and economic growth stimulus is going to make markets go up, and less economic growth is going to make markets go down, a little bit more similar to just basic convention, I guess. And so that's an interesting nuance of the market today as well. Apple over 150, so you're still going up over the 200 EMA. Amazon popped up as well. And so again, the reports that drop soon in the next 6 minutes are going to be Amazon and Google. And again, we're going to cover these as soon as they drop. Be ready. All right, team, we got about 6 minutes. I'm not sure, Kim. I don't know if it's necessarily super weird. I think that the market generally goes up. And so like betting long term that the market's going to crash, or betting long term on the down end. Again, I think one of the riskier bets that you can make is betting that a blue chip stock is going to go down long term. If you pick the stocks right, most blue chip stocks are going to go up long term, and that's a profound edge that you shouldn't underestimate, in my opinion. That's one of the biggest edges that we get. And I've been saying the same thing, to put it into perspective, for the last few weeks here prior to this big bull run. When everybody was saying the market was going to crash and the market was going to fall and all this stuff, I've been saying the same thing. And so it's one of those things where it's like, look, the big edge you get in the market, guys, in my opinion, is that the market's going to go up long term. Like, sure, you're going to have individual years that might be bearish. You're going to have individual down years. But over time, that's going to rebound. Even after market crashes, the market generally rebounds within a couple of years anyway. So the people that lose the most during stock market crashes are usually people who sell at the bottom. And so it's like, that's an edge that a lot of people underestimate. They go chasing other things, and they try to day trade, and I day trade, but again, I don't underestimate that edge. Yeah, it'll be interesting to see if they say anything about AI with Chat GPT getting so big. That's a big talk, a big conversation for sure. Amazon is right here on the left. Here, I'll put big letters up so you guys can see the market reaction. Hold on, let me find my pen here. But yeah, we'll put this up. There it is. So this is Amazon. All right, there's Amazon. Apple. There's Apple, and then this is Google. There you go. That way everybody can kind of see what the market responses are going to look like here. Yeah, well, earnings calls are always optimistic, man. They're always kind of fluff, and that's fine. I mean, I get it. If you're running a company, you want to pump them up and just build them and, make them sound great. And that's normal for sure. All right, Apple move it up at 150s right now. Look at this. We can zoom in on Google as well. We can zoom in on Amazon. I sold most of it. I still hold a little piece of it, like a very small percentage of it. But I sold most of it like today, a few minutes after the opening bell. So yeah, another beautiful trade where I made 15%. 15%. I didn't make 14 or 15%. I made less than that, but Snapchat went up 14 or 15% within a few days of me buying it. And so I try to tell people, man, sometimes you just gotta ignore the haters. And maybe the haters are right sometimes, but again, waiting for stocks to drop big and have emotional big drops and just scooping them up cheap and then holding them for a few days or weeks or months, really whatever it takes. If it's a blue chip, then it's just profitable. Google just broke highs of the day up to 108.69s. Yeah, Mert, I'll be faster for sure, bro. Like I said yesterday, during the rate hike decision, I was switching between my paper account and my live account, and for whatever reason, I got hung up at the report. But don't worry, I'll cover it fast. Also, guys, we're gonna put it in sub-only mode, and guys, we are so close to hitting 100K. So close, man. We're at like 99K right now. So if you could take the time, hit the sub button, hit the notification bell, I would truly appreciate it. We got over 500 people here now. Just hit that subscribe button. Help us get to 99K. We're right around there now, and we can make the push towards 100K tomorrow. And remember, we got the earnings call. And again, we cover all the big major economic data. We cover jobless claims, retail sales, import-export prices, unemployment, CPI, PPI, Jerome Powell Fed meetings, press conferences, all that stuff. Also, make sure you hit the live button here, guys. So if you see this live button next to the play button, you want to make sure it's red. If it's silver, it means you're delayed on the stream. You want to make sure it's red so you can get the data as soon as it comes out. Just a little heads up. Less than a minute. Yeah, good luck, team. Hey, thank you, Coolness. I appreciate you guys. Again, my big thing is I don't sell a course. I don't sell a service. I don't claim to be an expert. I just report free data. I give people the data as soon as I can get it. And, hopefully that's helpful for traders. All right, guys. So we got Amazon and Google dropping their numbers in about 30 seconds. 30 seconds for Amazon and Google here, guys. 30 seconds. And then at 4:30, we have Apple. So Apple drops theirs in about 30 minutes. But Amazon and Google drop theirs pretty soon. Tesla is not under 100. Shepard. Tesla is almost at 200. All right, 10 seconds, guys. 10 seconds. All right, bear with me. All right, and there's that. All right, we're going to look for Google. Nothing out yet. Amazon, nothing out yet. Waiting here, guys. Patiently waiting. No news so far, guys. No news so far. Oh, wait. I'm sorry. It's not even 3 o'clock yet. The timer was a little bit early. All right, there's the closing bell. All right, let's check this out. Nothing out for Amazon. No big movement yet. Amazon looks like Amazon's moving here. Not really any big movement yet, so it doesn't look like they're out with theirs yet. Nothing yet. No movement yet here. No movement yet. There goes Amazon. It looks like Amazon's is out. But I don't see it yet, so we're waiting for it to refresh. The movement hasn't been big enough yet really here. So if we zoom in, very choppy action so far, so it doesn't look like anything's out. Google broke highs. I still don't think they're out yet. Nothing for Amazon. Nothing for Google. So still waiting for these guys. Nothing out yet. QCOM maybe. All right, there goes Amazon. Finally moving a little bit. Let's see what they did. All right, so Amazon's did just drop. Amazon posted first quarter sales of 121 billion, guys. 121 billion first quarter sales. For guidance numbers, Amazon posted first quarter sales of 121 to 126 billion for Amazon. And they are reacting pretty negatively here. Bear with me. We're going to show you guys what this data actually is in a second. Amazon North American segment sales increased 13%. Net income was $0.3 billion. Fourth quarter sales for Amazon beat expectations at $145.45 billion. EPS was 3 cents a share. So Amazon missed on EPS and beat on sales revenue. Again, missed on EPS and beat on sales revenue for Amazon. We're going to put the rest of the data up on screen. And it looks like their guidance came in a little bit higher than expected. Still waiting for Google data to drop. Google's not out yet. Put this data up on screen so you can see it. But yeah, Amazon's reacting very positively to this, up to 115.90s. 115.90s. Operating margin for the fourth quarter of Amazon was 1.8%. 1.8%. But yeah, here is the full results for Amazon. Amazon fourth. Here's the EPS. And quarter four sales beat. EPS missed by a big margin. EPS missed by a big margin, though. You can see that data, but it's still reacting very positively. Google looks like they're out with their data here as well. Give me a second. Positive guidance. Or no, guidance was a little bit better than expected for Amazon. Still waiting for Google to report their numbers here. Qualcomm posted adjusted EPS of 237 versus 234 expected. Revenue of 9.46. So EPS beat and a revenue miss for Qualcomm. Amazon posted EPS of 3 cents a share, missed the 18-cent estimate. Revenue of 149.2 beat the 145.42 billion estimates. Google, it looks like it's just following this up on sympathy, and so is Apple. But Google hasn't actually released their numbers yet, from what I'm showing up here. So Google's not actually out with theirs yet. Apple is popping up. Okay, so Google came out at 105 EPS, missed the 118 estimate. We're going to put this number up on screen as well. So here's the Google number. So Google just came out with theirs. They missed on EPS, beat on sales revenue, just like Apple. So they both missed on EPS and beat on sales revenue. Here's Alphabet right there. We're going to put these both on the same screen so you can see both of them here. So bear with me, guys. Here's Alphabet. We're going to put Amazon's up too. Right, so here's their full EPS. They both missed on EPS, beat on sales revenue. Is what happened. They both missed on EPS, beat on sales revenue. Amazon turning down here. Google's still slightly green from this. Apple's still very green from all of this sympathy. But yeah, there's the full list. Amazon fourth quarter EPS was 3 cents a share, missed the 17 estimate. Fourth quarter sales was 149.2 billion, beat the 145.45 billion estimate. Alphabet came in at 105. Missed the 118 estimate. Sales of 76.05 billion, beat the 75.69 billion estimate. So they both missed on EPS, beat on sales revenue. They're both pretty neutral. So mixed results for Amazon and Google here. They missed on EPS and beat on sales revenue. We're going to put the rest of this data up on screen for Google in the chat. No, not necessarily. It's never as binary as that, where they missed to sell or buy or anything like that. But yeah, these were kind of mixed results here, team. They weren't like overwhelmingly positive or negative. Amazon starting to test the 111 level. I don't see any guidance numbers for Google. I see Amazon guidance, which was a little bit better than expected. Yeah, so here's the Amazon guidance numbers. Is it, again, very neutral response so far here, team. Very neutral response. Amazon neutral. You can see it's kind of testing these lows. Apple's had a positive reaction to all this stuff. But both of them missed on EPS, beat on sales revenue. Amazon posted better than expected guidance on the top end of what they expected. Google, I don't think, did guidance yet. Yeah, so we're going to see what happens for Apple earnings. Apple's scheduled to release theirs in about 25 minutes. So stick around. We're going to cover that and stream the call. Yep. All right, so we're going to cover the rest of this stuff. So
Fourth quarter operating income for Alphabet was $18.16 billion. Fourth quarter other bets revenue was $226 million. Fourth quarter operating income for Alphabet was $18.16 billion. Fourth quarter ads revenue was $7.96 billion. Fourth quarter Google advertising was $59.04 billion. Traffic acquisition for the fourth quarter for Alphabet was $12.93 billion. Fourth quarter Google Cloud revenue came in at $7.32 billion. Fourth quarter revenue for Alphabet came in at $76.05 billion. Google Services revenue came in at $67.84 billion. Net revenue came in at $13.62 billion. Fourth quarter operating margin was 24%. Google Search and other revenue for the fourth quarter came in at $42.6 billion. Fourth quarter Google Cloud revenue is up to $7.315 billion from $5.54 billion. And so a lot of these did better than expected for Google here. And we're pretty much getting a neutral reaction. Qualcomm, I think we posted a little bit earlier. Qualcomm posted 237 EPS versus 234 expectations and revenue of $9.46 billion versus $9.6 billion. So most of these had mixed results. Apple and Amazon missed on EPS, beat on sales revenue. Qualcomm beat on EPS, missed on sales revenue. And again, EPS is profitability. So how profitable is the company? Like what their margins are like basically is EPS, right? Revenue is how much money they're bringing in. So Qualcomm beat on EPS, so beat on profitability, missed on revenue. Both Amazon and Google beat on EPS, missed on EPS and beat on revenue, right? So Amazon is what I meant, not Apple. Apple's not out yet. So far, we're getting a negative bearish reaction, though. So we're starting to see the tides turn a little bit. We're down to 108 for Amazon. Apple is testing the volume-weighted average price, but Apple is not scheduled to release their numbers for a few minutes. Again, do me a favor, hit the subscribe button, guys. Again, we are so close to hitting 100,000. So close. We got like 1,400 people here. Listen, if 50% of you guys that haven't subscribed, we're gonna get pretty close. Don't make me turn on Sarah McLachlan. Okay, hit the subscribe button. Do it now. Try it one time. It might feel good. Amazon pull it back. Apple pull it back. Google pull it back a little bit here. Starbucks posted as well. Let me see what Starbucks showed up as. Or maybe Starbucks isn't out yet. Let me see. Starbucks is out. So to give you the full list of what's going on right now. Hey, thank you, Humble. All right, so Starbucks posted a 75-cent EPS, which was a miss on $8.79 billion in sales revenue. Gilead beat on EPS. I don't know what their sales revenue was. WWE. All right, so again, Google just got a quick little pop-up. Did they post guidance numbers? All right, so Alphabet says recent assessment resulted in change in estimated useful life of servers, certain network equipment to 6 years, which will result in a reduction of depreciation of about $3.4 billion for the fiscal year of 23. Them announcing that made them pump up. They said that they're going to incur $1.9 to $2.3 billion in employee severance charges, and they're going to incur exit costs related to office space reductions of about $500 million. Ford, yeah, we can check Ford. Ford expected 60-cent EPS. They ended up showing up. Let me see what Ford did. Ford did 51 cent, missed 62 cent estimate, sales beat expectations. So better than expected revenue, worse than expected EPS or profitability. All right, and Apple still got about 20 minutes before their data comes out, about 20 minutes. GoPro posted 12-cent profit versus 9-cent estimate, so GoPro a little bit better. Starting to get a bounce back. Still technically green on the day for Amazon, Apple, and Google here. So they're all technically green on the day. Now at this point, we're patiently waiting for Apple to drop, which is in about 15 minutes. We'll put a timer up. All right, so let me see what time it is. All right, so we got about 19 minutes. All right, so 19 minutes before Apple numbers. 19 minutes. Okay, I'll put up the expected numbers for Apple here. Give me a second. Apple's expecting 193 EPS on 122.05 billion in sales rev. I will put that up here. All right, bear with me. All right, so here is what Apple's expectations are versus what everything else is on the screen. Again, Apple moving up a little bit. Google's still green on the day here. So, I mean, for those that are saying, oh, this is a big drop, I mean, not the biggest drop. You know, they're still fine. They're pretty neutral. And again, I mean, their results were pretty neutral. I don't think Google posted guidance, but aside from that, Amazon posted some guidance numbers. Slightly higher than expected. Bear with me. What's up, P? All right, guys, we still got about 17 minutes before the actual earnings are released for Apple, and then we still got about 45 minutes before the actual earnings call starts. And we're going to stream it all live here. Don't worry. All right, so get a little dip at Apple. We still have 17 minutes, guys. 17 minutes. All right, guys, Amazon at 108. We got Google at 104s roughly. Apple still slightly under 150 here, just under 150. Yeah, we're still close to 100K. Again, we'll get there hopefully in the next couple days. We're pretty close. Again, I'm not going to tell you, but subscribe. Do it now. Yeah, Ford posted hold on. So Ford posted a 51-cent EPS on 60-cent estimates. What was the revenue that came out for Ford here? What was Ford's revenue? Ford posted 51-cent estimates. Ford didn't do that bad. I mean, they missed by about 12 cents on EPS versus 62-cent estimates. They posted 51 cents. Sales came in better than expected by about $4 billion. You know what I mean? By about $3.7 billion better than expected in terms of sales revenue. So, I mean, you know, that wasn't bad. How bad did Ford drop? Ooh, I'm buying this dip. Yeah, I'm going to buy this dip. All right, so we just bought 25 shares of Ford. We bought the dip. We'll see if it does anything. No, Apple's not out yet. Apple still got 15 minutes before their earnings come out. Really about 14 minutes. I think I did my math wrong here. Let me fix this. What do we call it? Bro. All right, we're just going to trash that one. Add another one. Make it 0. We got about how long left? Yeah, we got about 13 minutes and 30 seconds. There we go. Ugh, dude, my math is off again. Oh my gosh, dude. Let me see. Nope. There we go. All right, we got it. We got it. 13 minutes, guys. Ford was mixed results, but I mean Ford was mixed results. Oh yeah, that's what I was thinking. You know, the crayon work. You know, definitely top 3 crayon drawings in the world right now for sure. Apple up to over 150s. Ford at 1325s right now, 1325s. Jasmine, so we already had most of the major earnings drop. The last one we're waiting for is Apple. So today we had Amazon miss EPS, Google miss EPS, Ford miss EPS, QCOM beat EPS, Starbucks miss EPS, Gilead beat EPS, Deckers beat EPS, Bill.com beat EPS, Team beat EPS, and we're still waiting on the other ones. Amazon beat revenue, Google beat revenue, Ford beat revenue, QCOM missed revenue, Starbucks beat revenue, I think. And so we're still waiting on Apple, but that's basically what happened so far. Tomorrow we have unemployment data coming out at 8:30. So tomorrow we do have unemployment data dropping at 8:30. That'll be very relevant because, again, it's going to show us what we're really fearing right now. If unemployment comes in super high and the markets go down, then that means we're back to a recession-fearing market. You know, today we had jobless claims numbers come out lower than expected, and the market went up, which is, again, contrary to how it's been over the last while. You know, basically everybody's fearing inflation, so like less people working has been interpreted as a positive thing because of inflation fears. But today we had lower jobless claims numbers, which, again, historically over the last 8 months or so has caused a big bear response, having lower than expected jobless claims, basically more people working. But instead today we had a very strong bullish reaction to lower than expected jobless claims numbers. And so it might mean that people are back to worrying more so about a recession than they are worrying about inflation. It's kind of what's the nuance of it, if that makes sense. EPS is profitability. Revenue is how much money a company's bringing in. So EPS is margins, and revenue is how much money a company's bringing in. Like revenue is potential. EPS is margins. You know. Yeah, Alphabet came out with theirs. All right, guys, we got 10 minutes. 10 minutes before Apple comes out. Again, we bought Google and we're already up about 30 cents a share here. I'm not saying it's going to hold, but or not Google. We bought Ford. I thought this was a big overreaction in Ford. I think Ford's had a. Let me see what Ford's. Let's calculate Ford's PE ratio really quick here. All right, so if we take a look at Ford here, and we look at their EPS numbers, right? Ford's trailing 12-month EPS is 222. I don't think that includes today, though, so I'm going to have to calculate this regularly by just adding up the different quarters of EPS to figure out what they're looking like right now. So all right, so Ford just dropped their numbers. And Ford posted EPS of, what did they post? Again, Ford posted EPS of 51 cents. So we do 0.51 plus, and again, I'm calculating the trailing 12-month PE ratio with the newest PE data. 0.28 plus 0.37 plus, oh no, that's it. Wait, I'm going to do this one more time. So 0.51 plus, we got 8.5 minutes. 0.51 plus 0.28 plus 0.18 plus 0.37. All right, so 134, and then we take the price of Ford, 1348, divided by 1.34, and that gives us a PE ratio of 4 of about 10. Still very cheap relative to other PE ratios. Very cheap for that. So about 10. Very small, less than Amazon, Apple, Google, all that stuff. It's literally 8x cheaper than Amazon's right now. So we bought Ford, but here's Google right here. So we'll put Google back up. Amazon's testing the previous closing price. Google just broke down a little bit more, down to 102s here. You still got about 8 minutes. Yeah, but the actual earnings report comes out at 4:30 in about 7 or 8 minutes. Starbucks reported theirs. They missed on EPS. Let me see what their revenue was. Starbucks posted 74-cent EPS on 8.7 billion in revenue. They expected 8.8 billion. So Starbucks missed on both. Apple's still pushing up a little bit though. Yeah, you're probably right, Chris. But again, I look for big emotional reactions and I buy the dip. And we bought Ford. We're still up like 30 cents a share already in about 10 minutes. So, I mean, you know, we'll take some profit and be fine in it, you know, and let it try to work a little bit longer. Still got about 7 minutes for Apple here, team. 7 minutes. Apple's still pumping up at 151s right now. So despite other tech falling down here, Apple is overwhelmingly moving up. I don't think Apple is out yet. Apple's not out with theirs yet. Google's still falling down some. Use the EXT order is what you do. I don't know about Apple. We're gonna wait. Yeah, maybe a buyback. That would make them pump, I think. Meta saved itself with the buyback they announced yesterday for sure. Apple finally dipping down. Google bouncing a little bit. How old is it? Yeah, Pawn. I see a DS banning that guy. Thank you, man. How old are these kids, man? Like, y'all are little kids, bro. If y'all are still acting like that and y'all are over 12, man, y'all should be ashamed, bro. Straight up. You know, y'all are just, you know, y'all should feel terrible, you know. Grow up, man. Apple pumping up. It's at 151.20s here. Amazon up to 107s. Google at 103s. Again, Apple expects 193 EPS on 122.05 billion in sales rev. So again, let me know what you guys expect. Wish I bought more Snap. Hey. Again, I've done this with Snap a few different times, bro. A few different times I've done the exact same thing with Snap, which is just wait for it to have a big overreaction to the downside, having a lot of people talk smack about it, and then just buying it up and holding it for a day or two and then taking profit. I've done it like at least 3 times now, and it works really well. Again, Snap is one of the most hated stocks in the market. I don't know why, but it is, and I capitalize on it because emotion drags it down to extended levels on the downside, and then we just let it bounce. All right, Google's starting to bounce back even more now. Again, about 4 minutes, guys. 4 minutes. We got about 1,700 people here. Again, we are pushing so close to 100,000. We really are so close. We're at about 99,000 now. If you know, if 50% of you subscribed, we're getting pretty close to 100K. You know, and so hey, subscribe if you haven't already. We've still got unemployment data. And again, my big thing is like, I don't sell a course. I don't claim to be an expert. I don't even claim to be a good trader. I don't want that type of pressure. I would rather just give people free data have a resource and community to hang out with people in, where we give people free, up-to-date data in real time. Thousands of people tune into these streams because we cover the data quickly once it comes out, and we give you a broad range of everything that's going on in the stock market. And so again, if you appreciate that, hit the subscribe button, hit the notification bell. We cover Jerome Powell press conferences, jobless claims, retail sales, CPI, PPI, unemployment, non-farm data, Jerome Powell rate hike decisions, all that stuff, and we cover it fast. So again, subscribe if you haven't yet. Help us hit 100K. Hey, thank you, Eddie, my guy. Thank you, man. Yeah, the whole world's waiting for Apple. Hey, cool, JF. Thanks, man. What happens tomorrow if the earnings are good? Do we sell? New trader here. I mean, I don't know what it's completely up to you what you want to do with the result that you get. Again, sometimes there's lag in between like the EPS, and sometimes the market's just completely nonsensical. And so I never take any big positions ahead of it. I never gamble on what the earnings report actually is, and I just try to react to what it is and trade that reaction, as opposed to gambling on what the actual earnings report is. Because sometimes it's nonsensical. Sometimes the stock can beat EPS, beat sales rev, beat guidance, and drop 10-15%. I'm usually there to buy it up if it does, but that does happen. It's never a perfect like binary good bad reaction. It's never like that. Sometimes I guess it is, but it's certainly not a consistent likelihood. I'm still green in Ford. I'm still up about 20 cents a share, and even if it drops, it doesn't matter. It's Ford. I'll hold it, earn money on a dividend or whatever it is, and just kind of sit on it. Amazon pumping back, Apple pumping back, Google pumping back. We got less than 2 minutes. Hey, thank you, Sandy. Yeah, guys, less than 2 minutes, about 1 minute and 30 seconds. Oh, man. All right, guys. Minute and a half. Again, they're expecting 193 on 122.05 billion in sales rev. They're expecting 193 on 122.05 billion in sales revenue. So $1.93 EPS on 122 billion in revenue is what they're expecting here. So again, Apple is right in the middle of the screen. Let's see what we get. Hey, thank you, Rogerio. I appreciate that, man. Again, make sure you're up to date on the stream, guys, just to make sure that you guys are all caught up. You want to make sure you hit the live button next to the play button. You want to make sure this is red right here. If this is not red, you are delayed on the stream. You're going to get late data. Make sure it's red. Make sure it's up to date. If it's silver or gray, it's late. Again, hit the subscribe button if you haven't yet, team. All right, I'm getting everything ready. We got about 30 seconds. 30 seconds. I'm going to pull all my sources up and prepare. All right, guys, 20 seconds. About 10 seconds, actually. So we're going to cut this and then just prep this. All right, here's the end. All right, guys. Apple with a big drop at 148.10. The algos of EPS of 188. EPS of 188. Sales of 117.2 billion. 188 EPS on sales of 117.2 billion. Again, we covered that fast. 188 missed on both, I believe. Let me make sure. Missed on both. Again, 188 versus 193 expectations. Revenue was, where'd it go? Revenue came in less than expected as well. So they missed on both, I believe. Revenue came in low, EPS came in low. 117.2 versus 122 expected revenue, 188 versus 193, and they are tanking down here. Big drop for Apple, down to 144s right now. Big drop for Apple, absolutely tanking now. So yeah, it's one of the reasons we don't gamble on this stuff. Glad I cut Snapchat today. I'm not going to say Snapchat's going to follow it. Maybe it does, maybe it doesn't. But Apple is dragging down here. And again, this is a big percentage of the S&P 500. We'll put these numbers up on screen. But I told you guys we covered that data quickly. And Yeah, this is why thousands of people tune in. We cover that data within like a second, guys, within like a second. And so here you go. Here's the data right here. We're going to put it up on screen. And yeah, there's the data. Hopefully you guys weren't super extended on the long side with Apple. Yeah, I mean, it could change for guidance talk. We're going to give you the full list of Apple data right here. The full list here. So they got a lot of data to review here for Apple here. A lot of data to review. Again, subscribe. We cover all this stuff as soon as it drops. But yeah, so Apple posted net revenue of $30 billion. First quarter Mac revenue of $7.74 billion. European revenue of $27.68 billion. Products revenue of $96.39 billion. Greater China revenue of $23.91 billion. Even despite this, Apple technically green on the day now, just broke over the previous closing price. So again, Apple posted EPS of 188, missed the 192 or 193 estimate. Revenue of 117.2, missed the 121.6 expectations. I saw 122 expectations. So yeah, they missed a lot. Apple wearables came in at 13.482 billion. They say they now have more than 2 billion active devices. Sales are down. EPS missed, so they missed on both. They said that they are expected to show first decline in nearly 4 years for sales. The first decline in nearly 4 years for sales, yet they are still green technically on the day here. They are up to 146.20s, which is above the previous closing price. They are still technically green on the day despite all of this. First quarter North American net sales came in at 49.278 billion, 49.278 billion versus 51.496 billion estimates. Tim Cook says that Apple production is, quote, now back where we want it to be, end quote. And they said that Apple's production distributions at these other manufacturers overseas lasted through, quote, most of the December. So that is Apple right now. And now they're back technically red on the day. But yeah. Apple returned over $25 billion to holders in the first quarter. They generated $34 billion in operating cash flow. America's revenue came in at just under $50 billion. Japan revenue came in at $6.76 billion. Yeah, I don't think Apple, guys. The earnings call is in about 25 minutes. We're going to stream that too. We'll put the timer up for that. But yeah, it's in about 25 minutes. Yeah, I don't think Apple's is cheap enough for me to really want to buy it like I did Ford or Snapchat. I just don't like it enough. You know, I'm not saying it's not going to go up. I think it's just moved up a little bit too much over the last few days. And, you know. Hey, nice tea. Yeah, could shoot back up with the call. I mean, it's possible for sure. Google's still green on the day. Amazon's still green on the day as well. And again, hit that subscribe button, guys. We're just at 99,000 right now, just at 99,000. And so, I mean, listen, we could get to like 99.3, 99.4 during this stream and only need about 600 tomorrow, which is possible with unemployment and non-farm data tomorrow. It's possible. So Apple at 144.30s, 144.30s. Amazon still green. Google still green. Apple is technically red slightly on the day, though. Yeah, Apple missed on EPS and sales rev. Why would you buy it, Max? Ahead of earnings, man. When Apple goes down. Yeah, but Jamie, the big thing you don't understand, though, Jamie, And again, I think people really want Michael to be right because, again, I think a certain amount of people just want to see the market burn. And I think that a lot of people look up and idolize Michael Burry. And so they follow and then kind of, put him on a pedestal and listen to everything he said. I'll put it this way, right? He didn't call anything because Apple is break even on the day. Apple is break even on the day. Amazon is green. Google is green. The SPY is green on the day. Apple is technically green on the day right now. And so just because Apple missed doesn't mean we're having some big parabolic crash down. Like that doesn't mean it. Again, technically Apple is actually green on the day. It's up to 146s. And so that doesn't mean anything. I mean, yeah, it missed on EPS and sales revenue, but, we'll see if they climb back up. But, in the end, if we look at the SPY here, for instance, right now, SPY is still pretty green on the day by about $4, $3.50 green on the day on the SPY. If you look at a 20-day chart, the market is very green right now. Michael Burry told everybody to sell ahead of yesterday's Fed meeting, and we pumped up even more. That's why he's getting made fun of, is because he told everybody to sell ahead of the Fed rate hike decision, and then we ripped up huge percentages afterwards. So that's why he's getting made fun of. Just to put into, just to give you some clarity on that and perspective. Yeah, since his tweet, the NASDAQ is up 800 points. And again, I don't really want the market to do anything. I guess I want it to go up because I want the market and the economy to do well. But it's not like I'm like some big perma bull that's got thousands of dollars locked into long positions. I don't. I might have some. I don't know how much I have with Ford. I bought Ford just now. And Ford is up. I am up about 40 cents a share on Ford right now. Snapchat, I'm up big. Bought Snapchat too. Getting some big movement here. Waiting for the earnings call. That'll be interesting. Apple says they now have 935 million paid subscribers. Burry, I mean, listen, off grid, Burry is not always right in the long term, man. Burry's actually been wrong more than he's been right. He was right about the short in 2008, but he's been wrong about basically everything else. Yeah, and maybe Burry's right. Like I said, I don't know. Again, I don't know. Maybe we do crash, right? But I think anybody that acts like they know 100% what's going to happen is usually confirmation bias, influenced by their own positions or their own. Again, they're trying to confirm what they want to happen, not necessarily what the data shows them. Michael Burry is a perma bear, and we've kind of ripped up big a lot over the last 10 years, especially Bitcoin, and other crypto. Hey, what's up, Bryn? Yeah, it's all good. All right, guys. So again, we do have the earnings call. We will go ahead and schedule this. I'm gonna put this out of the way. My beautiful, lovely drawings here are getting in the way, so I'm gonna get those out of the way. Yeah, listen, I'm a fan of Burry, believe it or not. I love The Big Short, man. Burry made a lot of money betting on mortgage failure in the 2000s. He basically bet that banks, Freddie Mae, Fannie Mac, and all of them were getting too greedy, issuing too many mortgages to really risky clients that would eventually fail and drag the rest of the U.S. economy down with it, with speculative investments like collateralized debt obligations and mortgage-backed securities. He was very correct about 2008, but again, I think people see him right about they see him being right about one thing and they think he's always right. You need to look up the history of his calls. Again, I like Burry. I love The Big Short. I think it was a brilliant move. He basically shorted tens of millions of dollars and had to create his own short instruments from these big banks like Bear Stearns. And so I look up to Burry, but I think that Burry is perma-bear and that he never looks at the upside. And again, I've been saying this for the last few months, really, which is that the market's already down over the last year. Everybody's saying we're in a bubble. What we're really feeling right now is the effects from 2020 and 2021. The supply chain effects of that. And I think that's only going to get better over time. I think the market's already down. For over a year, the market has been down. We've had a down year. And generally, historically, bear markets don't last forever. And I'm less likely to buy stuff right now because I think everything's just really high at this point in time over the last few days. And maybe we do crash. Like I said, I really don't know. I genuinely don't know. But I think acting like it's a absolute necessity to happen or like it's a sure thing is not really the best way to think because nobody knows what's going to happen, especially not Burry. And maybe he's right. Maybe we crash. But his accuracy is questionable. If you look at all his calls, and I think it's one of those things where we might crash. That's possible we do. But it's also possible we don't, and then we bounce back. And I think either one of them is okay to believe as long as you don't get insulting about it. It's all good. Hey, thank you, Mert. I appreciate you, man. Thank you, sir. Margin Call is a great movie too. Yeah, I love Margin Call too. Tomorrow we have Unemployment. Yeah, Burry's right every time, 50% of the time. He's right every time. All right, but yeah, market's still green on the day. SPY green, Apple, Amazon green. Apple's mostly break even. Yeah, I kind of agree with Jimmy. Dude, if you're wrong in the timing, then you're wrong. Yeah, I could say the market will dump tomorrow, and eventually it dumps the next month, and I could just say, oh, I was just a little bit off with my timing. It's like, yeah, that's exactly right. I could say, yeah, the market's going to go up, and then the market can crash tomorrow and rebound in 3 years, and then say, okay, I was right about the going up part. I was just wrong with the timing. The biggest edge of the market is that it actually goes up long term. S&P gives you 8 to 12% a year on average. That's the biggest edge you get. Maybe you could predict a short. That's fine. But again, it's not something that I like necessarily betting on. I think there's big risks there. I think it's easier to bet on the upside long term. But maybe I'm a bull, and again, that's certainly I'm definitely biased, I guess, for that. So it's all love here, regardless of what you believe. Hey, later, Marco. It's all good, bro. I mean, you all have to really understand this, though. Apple still posted a very positive EPS. The EPS miss was by 6 cents a share on 1.88 EPS. So it missed by 6 cents a share. Very small percentage miss. Revenue came in slightly lower than expected. And so, again, the expectations are given out by financial estimates. Y'all don't think they're kind of messing with this a little bit? I mean, I'm not saying they're messing with it, but what I'm saying is like, look, it's a subjective analyst expectation. They're still posting very good profit, EPS of 188. Revenue still over 100 billion. You know what I mean, for the quarter. So I mean, it's not like Apple's just in a huge struggle right now. Like they're just struggling to make ends meet here. That's not the case at all. They're making $100+ billion a quarter. You know. And it's not like I'm even holding Apple right now, but acting like the sky is falling, I don't think is healthy. Tesla's been weak before this EPS, but at the same time, you could also argue that Tesla has just been going up. Tesla's up like 100% over the last, month or so, few weeks. Yeah, again, I told you guys this morning, I thought we were a little extended on the upside, but I don't think some big catastrophic crash is going to happen, though. I mean, again, everything else is overwhelmingly green on the day still, and maybe it turns. We got the earnings call scheduled for a couple minutes. Hey, do me a favor, guys. We're just about to break 99K, so for the 1,300 still here, hit the subscribe button. Do it now. Try it one time. It might feel good. We're going to stream the full Apple earnings call completely live right here. And again, regardless of what you believe, it's all love here. It really is. Like, it doesn't matter what you guys believe. Hopefully we all make some money in the stock market. I hope we do. Hey, thank you, Miguel. I appreciate it, brother. All right, guys. So the earnings call. Let's get ready here. Apple earnings call starts too. Apple earnings call starts in about 13 minutes. All right, so we actually got the earnings call starting pretty soon here, team. Apple, pump it up, just technically tapped into green territory on the day, so Apple is now technically green, although it's pretty close to break even. But if you look at this, let's zoom in for a second here. This previous closing price, light blue line right here, is the previous closing price. It's the level at which it goes from red to green, green to red on the day. We are technically green on the day again for Apple, and it's kind of dragging everything else up with us. Yeah, but I think you got to look at, like Jerome Powell said during the press conference yesterday, that he thought inflation was going to get better. We also had a positive reaction to economic growth today with jobless claims, which means a few different things. Number one, it means that Jerome Powell thinks that inflation is going to get better over the next quarter. Number two, it means that the market is responding like GDP and economical growth is a positive thing, which is very contrary to how it's been over the last 8 months. And so you're seeing some positive signs. CPI, PPI is going down. Inflationary metrics are getting better, and which means inflation's getting better for sure. And so again, like I said, it's not going to continue forever. The market's already down over the last year. Usually markets aren't going to stay in bear territory for too long. But maybe I'm wrong. Again, maybe the market tanks. I don't know. Again, it's not like I'm not super extended on the long side right now either. I don't think acting like a crash is a for sure thing is necessarily accurate. I think that there's arguments for both sides. I think you could argue both sides of it, really. Because it's not about what the candle looks like, B. I mean, you're obviously bearish, and that's fine, but what I'm looking at is the previous closing price, which is the level at which Apple, I'm looking at the actual technical level of red to green, not just big red candle is bad, I'm looking at the actual previous closing price for Apple, which is technically green on the day. It's above where it closed yesterday, so it's green. Doesn't matter what the big candle is. It was just really green ahead of this, and now it's just kind of green, but it's still green. Yeah, who knows, man. Again, maybe we crash. I don't know. Earnings call starts in about 10 minutes, guys. About 10 minutes. Yeah, what's up, Todd? Yeah, all good, B. I mean, like I said, it could be manipulation. That's all fine, man. But you guys know how I feel about manipulation too. I said this earlier today. I actually posted this on Twitter. And what I said, let me see what I said. I said, no trader cries manipulation more than a trader who was wildly wrong about results and lost money. And so it could be manipulation. That's fine. But again, it could just be that we're not crashing because the market's already down and extended on the downside, that shipping is getting better and production is getting better and inflationary metrics are getting better as well. Rate hikes are going down over time and overall optimism is increasing in the markets. I mean, that could be why we're not crashing. You know, it's certainly possible. Again, a crash isn't certain and maybe it does, but we'll see. TOS lets you can use TOS in after hours. All right, we need less than 25 to break 99. My guess is we'll do it sometime during the earnings call, unless you guys want to help me out and hit that subscribe button here, team. Let me make sure. Let's see, we're gonna get ready for the Aapl call here. Terrible hold music, but we are waiting here. Starts in about 9 minutes, 8 minutes actually. Technical analysis on Google. Hey, I'm Big Papa Retail, bro. Get it right, man. My name is Big Papa Retail, bro. I'm top 3 greatest traders ever right now, dude. If your list doesn't have me on it, man, you're just missing out, man. You know, Google down on the day, but still red, or still green. I mean, so Google's still technically green on the day. Previous closing price for Google was about 101.40s. So, I mean, it's still well above the previous closing price, still pretty green on the day. It had a pretty good pre-market session this morning, and obviously the whole market moved positive yesterday during the rate hike decision. What I'm surprised at, to be honest, is Amazon's still moving up, and Amazon's got a PE ratio of over 100 right now, over 100. Hey, thank you, Eric. I appreciate you, man. Thank you, sir. Aapl earnings call starts in about, what time is it? In about 6.5 minutes. What would be a good reason for the market to rise? I mean, okay, if you actually look at what happened for the earnings, right? Aapl missed. Amazon had mixed results, so it didn't miss. Amazon had mixed results. Google had mixed results. Ford had mixed results. QCOM, I don't know what QCOM was, but a lot of stuff beat on revenue. So more revenue coming in, and maybe that could, just to be fair, that could be interpreted as worse for inflation because it means they're making more money, but their margins still aren't better. You know, and that could be an argument there for sure. Again, I'm trying to stay objective here. That could be a pretty negative sign, but Amazon had better than expected guidance. And so regardless of what we did last quarter, future projections are looking a little bit better for some of these companies, despite what they did during these last quarters. And I think, again, the markets are up big. Aapl just fell red again on the day. It's still red on the day. Again, I feel like a lot of people just get stuck in the trap of, hey, like listen, guys, I'm gonna be real, okay? The best edge that you're ever gonna have in the stock market is buying things long term and sitting on them for years. All right, don't get stuck in the trap of day trading penny stocks, investing in penny stocks, shorting these behemoth companies like Apple, Disney, Google, right? Those are suckers bets most of the time. Like maybe you can make money doing it. The biggest edge you're ever gonna have in the market is long-term stocks generally go up. S&P 500 with literal decades, if not centuries of data, has gone up 8 to 12% on average a year, right? You shouldn't underestimate that edge. You can bet on the downside, that's fine, but you got to understand the risks of doing so as well. Again, if we look at the market as a whole over the last 20 days, market's still up very big over the last 20 days. The SPY is at 415 and still green on the day, right? So we could say all these different things and find all these things and argue that they're bad, and that's fine. But in the end, market's not really about company health. It's more so about the public's interpretation of company health, right? And so far, what the market shows us is that the public is interpreting the market over the last month or two as strong, and the market's been going up. That's it. I don't know what's going to happen. Maybe we crash. Maybe we don't. Maybe the market goes up. Maybe it goes down. I have no idea. But in the end, it is what it is. We'll see what happens. Yeah, very wise person once said, "Don't go chasing waterfalls. Stick to the rivers and the lakes that you're used to." Again, I think it was Pee Wee Herman, but I'm not 100% sure. Amazon pulled back. Hey, Amazon's looking stronger than any of the other ones. Apple's still pretty neutral on the day. SPY's still very green though. Francis, stop it. All right, guys. Hey, we got the earnings call about to start in 3 minutes. 3 minutes. Hit the subscribe button if you haven't yet. We did break. We're basically going to break 99,000 today. My guess is by the end of the stream, we'll hit about 99.2 or 3, hopefully. And so we got tomorrow. We'll see. It'll be close. Yeah, and Derek, maybe you're right, bro. Like, maybe we do fall, man. Again, I'm not arguing that we're not going to fall. What I'm saying is, like, generally from my experience, when you got the most people yelling fire, usually a flood comes. When you got most people yelling flood, usually a fire comes. Better to be fearful when others are greedy, greedy when others are fearful. Whatever cliched saying you want. Again, the real edge in markets is value investing long term, buying healthy blue chip companies, diversifying and holding for years if you need to. Again, a lot of traders get stuck doing a lot of other things that are unnecessary, like again, investing in sketchy penny stocks that are just manipulated and pumped and dumped, and then they cry naked short manipulation or whatever they want to say. There's a lot of ways that they get trapped, but again, the biggest edge you have is long-term gains in blue chips. And again, that's the biggest edge you're going to find over anything else in the market. No idea what Dirk. No idea what the market does tomorrow, man. I hope it goes up. All right, guys, earnings call is about to start. Can y'all hear the music? Let's get ready here. Again, hit that subscribe button. Also, guys, check out Top Step. Top Step is a funded account program for futures. Here is the E-mini. You can see it does exactly the same thing as the SPY. It's the S&P 500 futures contract, and you can day trade it in futures without restriction. Top Step is a funded account program in the futures. They give you a demo if you can hit the targets while following their rules. They fund you. It's really useful. Most people are not going to be able to get funded. I try to be transparent and honest. Most people are not going to be able to get funded because most people are just not good traders. But it's a great test of your skill, so you don't have to risk a ton of money. Putting up thousands and losing thousands like most new traders do. You can test yourself. If you hit their goals, you get funded with a 90% split. They pay out millions, fund thousands of traders a year. They've been around for over a decade. I'm definitely biased in their favor because they're a sponsor of mine, but here's the link if you want to check it out. Also, guys, the earnings call is about to start right now. Bear with me. We are going to get ready here. We got the earnings call on hold. How was the music? The music was good? We turned it off just now, but I'm going to mute this to make sure we can hear exactly when the earnings call starts. All right, still no start here. Terrible hold music for Apple, but that's okay. Yeah, somebody said the people who are saying bearish are the ones who know about the economy. The problem is that they've been saying bearish for 5 or 6 years every year. If you look at keywords trending, 2017 stock market crash, 2018 stock market crash, 2019 stock market crash. They've literally said it every year. Michael Burry. And You throw darts at a dartboard, eventually you're going to get it right. Here is the earnings call starting right now. Let me know what the sound
Being
is.
recorded. And now at this time for opening remarks and introductions, I would like to turn the call over to Tejas Gala,
Sound check. You
Director
good?
of Investor Relations and Corporate Finance. Please go ahead.
Thank you. Speaking first today is Aapl CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Before turning the call over to Tim, I would like to remind everyone that the December quarter spanned 14 weeks, while the March quarter, as usual, has 13 weeks. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and the future business outlook, including the potential impact of COVID-19 on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Appl's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Aapl assumes no obligation to update any forward-looking statements or information which speak as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Tejas. Good afternoon, everyone, and thanks for joining us. Today, we're reporting revenue of $117.2 billion for the December quarter. We set all-time revenue records in a number of markets, including Canada, Indonesia, Mexico, Spain, Turkey, and Vietnam, along with quarterly records in Brazil and India. As a result of a challenging environment, our revenue was down 5% year over year. But I'm proud of the way we have navigated circumstances seen and unforeseen over the past several years, and I remain incredibly confident in our team, in our mission, and in the work we do every day. Let me discuss the three factors that impacted our revenue performance during the quarter. The first was foreign exchange headwinds, which had a nearly 800 basis point impact. On a constant currency basis, we grew year over year and would have grown in the vast majority of the markets we track. The second factor, which we described in a November 6th update, was COVID-19 related challenges, which significantly impacted the supply of iPhone 14 Pro and iPhone 14 Pro Max and lasted through most of December. Because of these constraints, we had significantly less iPhone 14 Pro and iPhone 14 Pro Max supply than we planned, causing ship times to extend far beyond what we had anticipated. As we always have every step of the way throughout the pandemic, we continue to prioritize people and worked with our suppliers to ensure the health and safety of every worker. Production is now back where we want it to be. The third factor was a challenging macroeconomic environment as the world continues to face unprecedented circumstances, from inflation to war in Eastern Europe to the enduring impacts of the pandemic. And we know that Aapl is not immune to it. But whatever conditions we face, our approach is always the same. We are thoughtful and deliberate. We manage for the long term. We adapt quickly to circumstances outside our control while delivering with excellence in the things we can. We invest in innovation, in people, and in the positive difference we can make in the world. And we do it all to provide our customers with technology that will enrich their lives and help unlock their full creative potential. It's a wonderful thing to be a part of. And it's so rewarding for all of us at Aapl when we hear how much our customers are loving what we create. Let me talk now about what we saw across our product categories. Starting with iPhone, revenue came in at $65.8 billion for the quarter, down 8% year over year. However, on a constant currency basis, iPhone revenue was roughly flat. Our customers continue to rave about the astounding camera capabilities and unprecedented battery life and the groundbreaking suite of health and safety features. The iPhone 14 lineup pushes the limits of what users can do with a smartphone. During the quarter, Mac revenue came in at $7.7 billion, which was in line with what we had expected. We had a difficult compare because this time last year we had the extremely successful launch of the redesigned M1 MacBook Pros. We also faced a challenging macroeconomic environment and foreign exchange headwinds. We remain confident in and focused on the long-term opportunity for Mac. Just last month, we introduced new MacBook Pro models powered by our latest developments in Apple Silicon, M2 Pro and M2 Max. These chips enable unprecedented performance and do so with less energy, which is not only good for the environment, but gives the newest MacBook Pro the longest battery life ever in a Mac. We also introduced the M2-powered Mac Mini, which will supercharge productivity for users of all kinds and leave them stunned by just how powerful a Mac Mini can be. During the quarter, iPad revenue grew 30% to a total of $9.4 billion. The very strong growth was due in part to a favorable compare to the December quarter a year ago when we experienced significant supply constraints. Customers continue to praise our new lineup for its versatility, whether it's the new iPad Pro, now powered by the M2, or the newly designed iPad 10th generation with its stunning liquid retina display and beautiful colors. Revenue for wearables, home, and accessories was $13.5 billion, which was down 8% year over year, driven by foreign exchange headwinds and a challenging macroeconomic environment. We remain excited about the long-term opportunity in the category. As an example, a few weeks ago, we announced the next generation HomePod, which is an indispensable addition to the smart home. This powerful smart speaker relies on advanced computational audio to produce an incredible listening experience. We're also helping users make their homes safer with sound recognition. This feature, arriving later this spring, allows HomePod to send a notification directly to a user's iPhone if a smoke or carbon monoxide alarm sound is identified. We continue to hear wide praise for Apple Watch Series 8 and Apple Watch Ultra, which has set a new standard for what's possible with a wearable. From a whole host of health and safety features to incredible new capabilities for extreme athletes, there is something for everyone in these amazing products. Customers are excited about some phenomenal new features we've made available across many of our products as well. One of the highlights is Emergency SOS via satellite, which launched for iPhone 14 customers in the US and Canada in November, and for customers in France, Germany, Ireland, and the UK in December. This is a feature we hope our users will never need, but it is incredibly heartening to get emails from people describing the life-saving impact our new safety features have had on them. We're always looking for new ways to empower people to create and collaborate. In December, we released Freeform, a brand new app that lets users take their ideas wherever they want, anywhere they are, all while collaborating in real time. Freeform has already received praise from reviewers for its flexibility and simplicity as it works seamlessly across iPhone, iPad, and Mac. Today, we are very excited to announce that we've achieved a truly incredible milestone. Thanks to our deep commitment to innovation, incredible customer loyalty and satisfaction, and a large number of switchers, we now have more than 2 billion active devices as part of our growing installed base, double what it was just 7 years ago. This is an incredible testament to our products and services and the strength of our ecosystem. We set an all-time revenue record of $20.8 billion in services, which was better than what we had expected. We achieved double-digit revenue growth from App Store subscriptions and set all-time revenue records across a number of categories, including cloud and payment services. All told, Apple now has more than 935 million paid subscriptions. Apple has also just begun a historic 10-year partnership with Major League Soccer. Just yesterday, we launched MLS Season Pass, which will give fans in more than 100 countries access to every live MLS regular season game, as well as the playoffs and MLS Cup, all with no blackouts. And while we're providing more content to sports fans than ever before, Apple TV Plus continues to showcase powerful characters and moving storytelling. We were thrilled to celebrate the holidays alongside our Apple TV Plus subscribers with the hit movie Spirited, and we're delighted to see how much people are enjoying new and returning series like Shrinking, Slow Horses, and Truth Be Told. And we have some great upcoming movies in Sharper and Tetris, along with Emmy Award winner Ted Lasso returning this spring. During the quarter, we made some great updates to Fitness Plus as well, expanding our catalog of more than 3,500 workouts and meditations to include a new kickboxing category and a new sleep theme for meditations. Our latest Artist Spotlight series features the music of the incomparable Beyoncé, and we're excited to take a stroll with guests appearing on our 5th season of Time to Walk. And we continued to build on our decades-long commitment to helping small businesses thrive when we announced Apple Business Connect. This new tool gives business owners even more control over how billions of people see and engage with their products and services every day. Businesses of all sizes can now customize key information for users across Apple Maps, Messages, Wallet, Siri, and other apps. Meanwhile, in retail, we celebrated 25 years of the Apple Online Store and also opened Apple Pacific Center in Vancouver and Apple American Dream in New Jersey. And I'm grateful to all the teams who helped our customers throughout the busy holiday season. At Apple, we spend a lot of time focused on creating an unparalleled experience for our customers in every product and service that we offer. We're also just as dedicated to leading with our values in everything we do. As part of that work, we strengthened our deep commitment to privacy and security, giving users 3 new tools to protect their most sensitive data: iMessage contact key verification, security keys for Apple ID, and advanced data protection for iCloud. At Apple, we feel a deep sense of responsibility to leave the world better than we found it. We're also a year closer to 2030, and we remain ever focused on the environmental commitments we set out for the end of the decade. As an example, the latest Mac Mini and MacBook Pro models all use 100% recycled aluminum in the enclosure and recycled rare earth elements in all magnets. And in a first for HomePod, we're using 100% recycled gold in the plating of multiple printed circuit boards. In honor of Black History Month, we released the Black Unity Collection, including the special edition Apple Watch Black Unity Sport Loop, a new matching watch face, and iPhone wallpaper. Through our Racial Equity and Justice Initiative, we're expanding our support of 5 organizations focused on lifting up communities of color through technology. And we are committed, as ever, to building on our progress around inclusion and diversity. During the quarter, we also announced that since the inception of our giving program 11 years ago, we've donated more than $880 million to humanitarian efforts, disaster relief, childhood education, and more. And over the last 16 years, through our partnership with RED, Apple-supported grants have helped more than 11 million people get the care and support services they need. As we look ahead in 2023, we are excited about the year to come. At Apple, we are always looking forward, always focused on the next challenge, always determined to do great things with unmatched creativity and unrivaled innovation. And that makes me more confident about the future of Apple than I have ever been. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. As Tim mentioned, revenue for the December quarter was $117.2 billion, down 5% from last year. A number of factors had a significant impact on our results. First, we faced a very difficult foreign exchange environment, which affected our performance by nearly 800 basis points. In other words, we grew revenue on a constant currency basis, and in fact, we did so in the vast majority of markets. Second, the macroeconomic environment this past quarter was markedly more challenging than 12 months ago. Third, we experienced significant supply shortages for iPhone 14 Pro and iPhone 14 Pro Max in November and through December. On the other hand, we had the positive impact of the 14th week in the quarter that Tejas mentioned at the beginning of the call. Products revenue was $96.4 billion, down 8% from last year due to the factors I just called out. At the same time, however, our installed base of active devices grew double digits and achieved all-time records in each geographic segment and in each major product category. We are proud to now have over 2 billion active devices in our installed base. This continued growth in the installed base is due to extremely strong levels of customer satisfaction and loyalty, and a high number of customers who are new to our products. The installed base growth also helped our services set an all-time revenue record of $20.8 billion, up 6% over a year ago. We achieved this new milestone despite more than 700 basis points of negative impact from foreign exchange. We reached all-time services revenue records in the Americas, Europe, and rest of Asia Pacific, and a December quarter record in Greater China. We also set records in many services categories, including all-time revenue records for cloud services, payment services, and music, and December quarter records for the App Store and Apple Care. Company gross margin was 43%, up 70 basis points from last quarter due to leverage and favorable mix, partially offset by foreign exchange. Products gross margin was 37%, up 240 basis points sequentially, and services gross margin was 70.8%, up 30 basis points sequentially, both due to the same factors that impacted total company gross margin. Operating expenses of $14.3 billion were significantly below the guidance range we provided at the beginning of the quarter and grew at a slower pace than in the past, as we took actions to respond to the current macro environment. Net income was $30 billion, diluted earnings per share were $1.88, and we generated very strong operating cash flow of $34 billion. Let me now get into more detail for each of our revenue categories. iPhone revenue was $65.8 billion, despite significant foreign exchange headwinds, supply constraints on iPhone 14 Pro and iPhone 14 Pro Max, and a challenging macroeconomic environment. In spite of these circumstances, we set all-time iPhone revenue records in Canada, Italy, and Spain, and saw strong growth in several emerging markets, including all-time iPhone revenue records for India and Vietnam. Importantly, the installed base of active iPhones continues to grow nicely and is at an all-time high across all geographic segments. In emerging markets in particular, the installed base grew double digits, and we had record levels of switchers in India and in Mexico. Our customers continue to love their experience with our products, with the latest survey of US consumers from 451 Research indicating customer satisfaction of 98% for the iPhone 14 family. Mac revenue was $7.7 billion, down 29% year over year and in line with our expectations. There were three key drivers for our Mac results. First, we had a challenging compare against last year's launch of the completely reimagined MacBook Pros, our first notebooks with M1 Pro and M1 Max. Second, we believe that the macro environment impacted our Mac performance. And third, we faced significant foreign exchange headwinds. At the same time, however, the installed base of active Macs reached an all-time high across all geographic segments, and we continue to see very strong upgraded activity to Apple Silicon. Customer satisfaction with Mac remains very strong at 96%, based on the latest survey of US consumers from 451 Research. iPad revenue was $9.4 billion, up 30% year over year, despite significant FX headwinds. This performance was driven by two key items. First, during the December quarter a year ago, we experienced significant supply constraints, while this year we had enough supply to meet demand. Second, we launched our new iPad and the iPad Pro powered by the M2 chip during the quarter. The iPad install base reached a new all-time high thanks to incredible customer loyalty and a high number of new customers. In fact, over half of the customers who purchased iPads during the quarter were new to the product. Wearables, home, and accessories revenue was $13.5 billion, down 8% year over year. The year-over-year decline was driven by significant FX headwinds and a challenging macroeconomic environment. However, our installed base of devices in the category set a new all-time record thanks to the largest number of customers new to a smartwatch that we've ever had in a given quarter. In fact, nearly two-thirds of customers purchasing an Apple Watch during the quarter were new to the product. Moving to services, we generated $20.8 billion in revenue, a new all-time record in total and for many services offerings, in spite of a difficult foreign exchange environment and macroeconomic headwinds impacting certain categories such as digital advertising and mobile gaming. In constant currency, we grew services revenue double digits on top of growing 24% during the December quarter a year ago. We remain focused on the large long-term opportunity in this category, and we continue to observe several trends that reflect the strength of our ecosystem. For example, we saw increased customer engagement with our services during the quarter. Both our transacting accounts and paid accounts grew double digits year over year, each setting a new all-time record. Paid subscriptions also continue to grow nicely. We now have more than 935 million paid subscriptions across the services on our platform, up more than 150 million during the last 12 months alone, and nearly 4 times what we had just 5 years ago. And we continue to increase the reach and improve the quality of our offerings. For instance, Apple Pay is now available to millions of merchants in nearly 70 countries and regions, and we saw a record-breaking number of purchases made using Apple Pay globally during the holiday shopping season. Finally, our installed base of over 2 billion active devices represents a great foundation for future expansion of our ecosystem, and it continues to grow even during difficult macroeconomic conditions, which speaks to the exceptionally high levels of customer loyalty and satisfaction and our ability to attract new customers to our platform. The growth is coming from every major product category and geographic segment, with strong double-digit increases in emerging markets such as Brazil, Mexico, India, Indonesia, Thailand, and Vietnam. Turning to the enterprise market, we have seen continued adoption of our services for business, like Apple Business Essentials, Apple Care, Tap to Pay, and Apple Financial Services. For example, Mars Incorporated has expanded its use of Apple Care for Enterprise to provide timely device support and assurance for iPads deployed across their manufacturing sites. Meanwhile, HCA Healthcare has leveraged Apple Financial Services to manage the annual refresh of its entire fleet of iPhones. This not only ensures that their staff stay current on the latest Apple technology, but also provides them with significant annual savings in the process. Let me now turn to our capital return program and our cash position. We returned over $25 billion to shareholders during the December quarter as our business continues to generate very strong cash flow. This included $3.8 billion in dividends and equivalents and $19 billion through open market repurchases of 133 million Apple shares. We ended the quarter with $165 billion in cash and marketable securities. We repaid $1.4 billion in maturing debt and decreased commercial paper by $8.2 billion, leaving us with total debt of $111 billion. As a result, net cash was $54 billion at the end of the quarter, and we maintain our goal of becoming net cash neutral over time. As we move into the March quarter, I'd like to review our outlook, which includes the types of forward-looking information that Tejas referred to at the beginning of the call. Given the continued uncertainty around the world in the near term, we are not providing revenue guidance, but we are sharing some directional insights based on the assumption that the macroeconomic outlook and COVID-related impacts to our business do not worsen from what we are projecting today for the current quarter. In total, we expect our March quarter year-over-year revenue performance to be similar to the December quarter. This represents an acceleration in our underlying year-over-year business performance as the December quarter benefited from an extra week. Foreign exchange will continue to be a headwind, and we expect a negative year-over-year impact of 5 percentage points. For services, we expect revenue to grow year-over-year while continuing to face macroeconomic headwinds in areas such as digital advertising and mobile gaming. For iPhone, we expect our March quarter year-over-year revenue performance to accelerate relative to the December quarter year-over-year revenue performance. For Mac and iPad, we expect revenue for both product categories to decline double digits year-over-year because of challenging compares and macroeconomic headwinds. We expect gross margin to be between 43.5% and 44.5%. We expect OpEx to be between $13.7 and $13.9 billion. We expect OI&E to be around negative $100 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. Finally, today, our board of directors has declared a cash dividend of 23 cents per share of common stock, payable on February 16, 2023, to shareholders of record as of February 13, 2023. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We will go ahead and take our first question from David Vogt with UBS.
Great. Thanks, guys, for taking my question. So, Tim, and maybe this is for Luca as well, you talked about the supply chain returning back to normal after a very difficult October, November, but we're still seeing some disruptions across tech products, whether it's enterprise or consumer-facing. How do you think about your supply chain and maybe the levels of inventory or builds that you might need as we go forward to sort of insulate your business from these sort of episodic disruptions? Have you changed your view? And if so, how does that affect, ultimately margins and sort of your balance sheet and cash flow items going forward? Thanks.
This is Tim, David. From a supply point of view, we did see disruption from early November through most of December, and from a supply chain point of view, we're now at a point where production is what we need it to be, and so the problem is behind us. In terms of going forward in the supply chain, we build our products everywhere. There are component parts coming from many different countries in the world, and the final assembly coming from 3 countries in the world, and on just iPhone. And so we continue to optimize it. We'll continue to optimize it over time and change it to continue to improve. I think when you sort of zoom out and back up from it, the last 3 years have been a pretty difficult time between COVID and silicon shortages and the like. And I think we have had a very resilient supply chain in the aggregate. In terms of supply for this quarter, which I think was one of your points, I think we're in decent supply on most products for the quarter currently.
Great, thank you.
Yeah.
Great, thanks. Can we have the next question, please?
Our next question is from Shannon Cross of Credit Suisse.
Thank you very much. Luca, I wanted to dig a bit more into the commentary on gross margin. The guidance, especially at 43.5 to 44.5, is obviously quite strong. So I'm wondering what's helping you out there, assume mix and some other things. And then, how should we think about what currency and hedging is going to do as we look forward? And then I have a follow-up.
Shannon, yes, I mean, we've had good margin for the December quarter to start with. We reported 43%. Obviously, in December, we have the benefit of leverage because of the seasonality of the business, but we also had favorable mix across the board. Of course, foreign exchange is an issue right now. In the December quarter, on a sequential basis, foreign exchange was a negative 110 basis points for us. And on a year-over-year basis, it's 300 basis points. So obviously, the FX environment has changed a lot during the last 12 months. For March, yeah, we've seen a margin expansion, 43.5 to 44.5. We're doing a lot of work around cost. Of course, the mix will continue to help both within categories and services mix as we move away from the holiday season. But we're doing a lot of work on the cost structure, and that is paying off. Foreign exchange is still a negative, about 50 basis points sequentially, but it's mitigating. The last couple of weeks, the dollar has weakened a bit. And so hopefully, as we go through the year, hopefully things will improve. But for now, as you correctly state, we are in a good position on margins.
Thank you. And then, Tim, can you talk a bit about China? What you're seeing. Obviously, you had the issues with production, but I mean more on the demand side. As we've gotten through into Chinese New Year and the opening. I'm just wondering, are you seeing the Chinese consumer come back? What are they buying, and how are you thinking about your position there? Thank you.
Mm-hmm. Shannon, last quarter we declined by 7% on a reported basis, but we actually grew on a constant currency basis, and that was despite some significant the supply constraints that we talked about earlier, and obviously the COVID restrictions throughout China that happened in various different places throughout the country also impacted the demand during the quarter. When you look at the opening that started happening in December, we saw a marked change in traffic in our stores as compared to November, and that followed through to demand as well. And I don't want to get into January. We've obviously, for January is included in the guidance, or the color rather, that Luca provided earlier. But we did see a marked change from December compared to November.
Thank you.
Yep.
Great. Thanks, Shannon. Can we have the next question, please?
Our next question is from Eric Woodring of Morgan Stanley.
Hey guys, thanks for taking my questions. Maybe Tim, first one for you. That 2 billion installed base device installed base figure, that's up, I believe, 200 million units year over year. That implies the strongest annual gain in new devices in your installed base, basically as far back as you've provided those data points. And so I guess my two questions are: one, can you provide the installed base for the iPhone at year end? And then two, is there anything that you see in this new cohort of users that might look different or similar to past cohorts, either by demographic or regions or monetization ramp? And then I have a follow-up. Thanks.
Yeah, the install base is now over 2 billion active devices, as you mentioned, and we set records across each geographic segment and major product category, and so it was a broad-based change. To correct one thing you said, it's up over 150 million year over year. The last report we reported to be over 1.85, and so it's 150, which we're very proud of. We also saw strong double-digit in several of the emerging markets, which is very important to us. For example, India and Brazil as just two examples. So very, very strong, and obviously it bodes well for the future.
Great. Thank you for the color, Tim. And then, Luca, obviously the December quarter was negatively impacted by the production challenges. Can you just maybe unpackage where channel inventory levels are today, kind of across the iPhone broadly, and then, what the data that you're seeing so far this quarter is telling you about iPhone demand deferral versus kind of iPhone demand destruction, and perhaps pushing some upgrades later into the year rather than into the March quarter. And that's it for me. Thanks.
Yeah, Eric, I'll take that one as well. The channel inventory levels on iPhone, we obviously ended the December quarter below our target range, given the supply challenges on iPhone 14 Pro and iPhone 14 Pro Max. But as you think about this, keep in mind that a year ago, we also exited the December quarter below our target inventory range because of supply challenges in the year ago quarter, not related, not the same issue by just as a point. And so that hopefully gives you some flavor of that. In terms of what we're seeing in January, we've included in our color that Luca provided, kind of our thinking. It's very hard to estimate the recapture because you have to know exactly what would have happened and how many people bought down, and it takes a while to get those reports in during the quarter, and so we've made our best guess at it. In terms of the sizing of the constraint in Q1, what we estimate, although not with precision, is that we believe iPhone would have grown during the quarter had it not been for the supply shortages. So hopefully that provides you a little bit of color.
Yep, that's great. Thanks so much.
Thanks, Eric. Can we have the next question, please?
Our next question comes from Aaron Rakers of Wells Fargo.
Yeah, thanks for taking the question. I have two as well, if I can. I guess the first kind of question, just going back on the gross margin line, pretty good guidance into this March quarter. I'm curious if you unpack that a little bit, specific around what you're seeing as far as maybe benefits from component pricing, in the guidance, if you're embedding any of that at this point.
Yeah, of course, with our guidance, we try to capture every aspect of our cost structure, and obviously components are a big portion of that. So definitely that's included. And keep in mind, again, that foreign exchange, I mentioned earlier, I think to Shannon, that the sequential negative on FX is 50 basis points versus a year ago. It's 270 basis points. Obviously, the US dollar has moved a lot over the last 12 months. So obviously, we need to find offsets and more to the negative FX in order to be able to provide this kind of guidance. And so obviously, components are a big part of that.
Yeah. And then kind of, from a strategic perspective, given kind of the things that we're seeing out in some of your peer group, I'm curious, Tim, how you think about, the role of AI in your strategy as far as particularly in the services segment, whether you see opportunities to excel monetization abilities within the paid subscriber base, and whether or not AI is just something that you're implementing a bit more strategically there.
Yeah, it is a major focus of ours. It's incredible in terms of how it can enrich customers' lives, and you can look no further than some of the things that we announced in the fall with crash detection and fall detection, or back a ways with ECG. I mean, these things have literally saved people's lives, and so we see an enormous potential in this space to affect virtually everything we do. It's obviously a horizontal technology, not a vertical. And so it will affect every product and every service that we have.
Thanks. Can we have the next question, please?
Certainly. Our next question comes from Amit Daryanani of Evercore.
Yep. Thanks for taking my question. I guess the first one I have is, Tim, I think based on your earlier comments that iPhones would have grown ex the production issue that imply that maybe it's a $7 billion or so impact that you had in December quarter from the production challenges on the high-end models. I'm sure it's tough to see what happens this time around, but I think historically when you've had, production issues or things like this happen, what has the consumer behavior been typically? Do they tend to go down towards the lower-end models and get the phone they want quickly, or do they just defer their production? Just from a historical perspective, I think, do you typically recover what's deferred out or no?
It's very hard to estimate is the real answer because you have to know a lot of data, and it's usually only in hindsight that you have a more reasonable view of it. And so we put our best views in the color that Luca provided. That's kind of what I would say.
All right. And then, I guess maybe if I think about services as you go forward, and you've had really good growth in services, I think, over the last several years. But as you go forward in services, what do you think drives the growth more? So is it the expansion of your install base, or is it more going to be driven by, Aapl going higher for you? I'm just curious, how do you think about those two buckets as you go forward?
I mean, there's a number of things, and I mentioned a few of them during the call. The first step is always the install base. The install base is the engine for services growth, and the fact that the install base is growing very nicely and it's growing, in a lot of emerging markets, is growing even faster. That gives us, a larger addressable pool of customers. So that's incredibly important. The second one is that we're seeing that the level of engagement of our customers already in our ecosystem continues to grow. I mentioned that both transacting accounts and paid accounts grew double digits. And so that bodes very well for the future. And we have a lot of transacting accounts that can move to paid accounts over time. The other aspect that is very important for us is to continue constantly to improve the reach and the quality of our services. And I gave the example of Apple Pay, which it's a great example because, we started off primarily in the United States. Now we've taken it to 70 markets, millions of merchants. And so obviously payment services continue to set new highs all the time for us. And as you've seen over the last few years, we also launched new services over time, and that obviously contributes to the growth. We're very excited, and when we look at the behavior of our installed base, we think it's very promising for the continued growth of our services business.
Perfect. Thank you.
Thanks, Amit. Can we have the next question, please?
Our next question comes from Harsh Kumar of Piper Sandler.
Yeah, hey, Tim, I had a quick question on emerging markets. Seems like you're making a lot of strides in India. Potentially wanted to understand the kind of share you have in China and India, and relative to that, what would be your aspirational but sort of achievable share in iPhones in those territories, whether it's units or revenues? And I was hoping to draw on your experience of maybe what you've seen in other countries where you've had some longer presence.
And looking at the business in India, we set a quarterly revenue record and grew very strong, double digits year over year. And so we feel very good about how we performed, and that's despite the headwinds that we've talked about. Taking a step back, India is a hugely exciting market for us and is a major focus. We brought the online store there in 2020. We will soon bring Apple Retail there. So we're putting a lot of emphasis on the market. There's been a lot done from a financing options and trade-ins to make products more affordable and give people more options to buy. And so there's a lot going on there. We're in essence taking what we learned in China years ago and how we scaled China and bringing that to bear. And I don't have the exact market shares in front of me, but I think you would see that from a market share point of view that we grew around the world last quarter, despite on iPhone, despite the challenges that we had on the supply side. And I wouldn't expect to have a difference in those two markets.
Understood. And for my follow-up, I had a sort of a interesting theoretical question on pricing. Assuming we get the CHIP Act passed and there's a whole bunch of manufacturing that happens in U.S. and other territories that are potentially somewhat more expensive than the ones you might be in now, has the company done any studies to gauge the elasticity of demand relative to small price increases in your products?
We have experience in that, but I wouldn't necessarily draw the same conclusion that you have in terms of the cost of the product. We don't know at this point exactly what that will be, but we're all in terms of being the largest customer for TSMC in Arizona, and are very proud to take part in that. That's what I would say about that.
Okay, fair enough. Thank you, Tim.
Yeah.
Thanks. Can we have the next question, please?
Sure. Next question comes from Wamsi Mohan of Bank of America.
Yes, thank you. Tim, you've done a phenomenal job with driving consumer choice towards higher-end products within your portfolio. How would you compare this cycle for iPhones if you were to segment the Pro versus non-Pro models versus the cycles from the past few years? And do you think this move to higher ASPs is sustainable, or do you think it reverses in a tighter consumer spending environment? And I have a follow-up.
The Pro has been a 14 Pro and the 14 Pro Max have done extremely well up until the point where we had a supply shortage and couldn't provide the total of the demand. And so it's definitely a strong Pro cycle. I think there's a number of reasons for that, but the most important one is always the product. And I think the innovations in the product speak for themselves. And we feel very good about the product that we announced back in September, and are happy to now be at a point where we're shipping to the demand.
And Tim, do you think that this move to sort of higher ASPs that has happened over the last few years is sustainable, or could it sustain in this very tough macro environment that you've cited?
I wouldn't want to predict, but I would say that the smartphone for us, the iPhone, has become so integral into people's lives. It contains their contacts and their health information and their banking information and their smart home and so many different parts of their lives. It's their payment vehicle and for many people. And so I think people are willing to really stretch to get the best they can afford in that category.
Okay, great. And Tim, you clearly emphasize the focus and importance of the install base. If we think about the absolute growth of the install base from 1 billion to 2 billion over 7 years from a device standpoint, how should we think about the penetration of services or the growth in paying customers on services over that time frame? Is that penetration rate increasing or decreasing? How fast is that growing relative to the growth of the overall install base?
Yeah, once it's Luca. Yeah, so of course, we keep track of that. It's really, really important for us. Over the last 7 years, as we've doubled the install base, we've seen a growing engagement of our customers on the platform. That happens, first of all, by customers transacting on the platform and then moving to paid accounts, so starting to pay for some of the services. That percentage of paid accounts tends to grow over time. We've seen it in developed markets, we see it in emerging markets, and that is due to some of the reasons that I was explaining earlier, including the fact that we made it easier for our customers to get engaged on the platform. For example, we offer multiple payment methods in many countries, and we've made it easier to explore for more services because we've added a lot of services on the platform over the last 7 years. So to your question, of course, higher engagement means a higher percentage of paid accounts over time.
Okay, thank you, Luca.
Great, thanks, Wamsi. Can we have the next question, please?
Our next question comes from Richard Kramer of Arete Research, LLP.
Operator,
Richard.
Yeah. Can we move on to the next?
Richard. Okay. Next, we'll hear from Jim Suva of Citigroup. And Jim, your line is open. If you can release your mute function, we are unable to hear you.
Tim and Luca, you both mentioned earlier on the Q&A a little bit about India. I was wondering if we're now entering a situation of even more opportunity because we've exited COVID, we've exited countries with different COVID criteria. We've also seen India build out its higher speed transmissions, and your market shares tremendously underrepresented there. And it appears with the supply chain, you're looking at diversifying kind of operational risk, not specific to any country, but just overall of, now you look at potentially opening up stores and stuff. Am I right that that's the way you look at it, is it's even more prime for opportunity now than ever? And once you start opening up stores there, you could just see a complete, green shoots of adoptions, or any additional commentary on your view on India as now we've navigated COVID and supply chain and so many challenges over the past 2 years. Thank you, gentlemen.
Yeah, Jim, we actually did fairly well through COVID in India, and I'm even more bullish now on the other side of it, or hopefully on the other side of it. And that's the reason why we're investing there, with bringing retail there and bringing the online store there, and putting a significant amount of energy there. I'm very bullish on India.
Thank you. And then as my quick follow-up, you'd mentioned that services, not necessarily specific to India, but services overall were better than expected. And of course, supply chain was more challenged than expected. So what was the bridge factor of services being better than expected on the upside? Was it like advertising or apps or paid monthly subscriptions, or what were kind of the things that really surprised you to the upside on services? Thank you.
It was Jim, it's Luca. It was primarily this level of engagement that we saw, which then it reflects into as you said, the paid subscriptions. We saw very good results in our cloud services business, in payment services. Music was very strong. So we had a number of categories that set new records, all-time records, and they did a bit better than we were expecting at the beginning of the quarter. And so Tim mentioned it. during, I think, his prepared remarks that when you look at it in constant currency, we grew services double digits, and that was on top of a 24% increase a year ago. So it's very sustained growth that we're seeing.
Thank you so much, and congratulations to you and all your teams.
Thanks, Jim. Can we have the next question, please?
Our next question will come from Krish Sankar of Cowen and Company.
Yeah, hi, thanks for taking my question. I have two of them too. First one, Tim or Luca, you mentioned how the macro did soften and they had an impact. And as consumers tighten their belts, when you look across your hardware products and service businesses, where have you seen the biggest impact and where have you seen the least impact from the softening macro? And then I had a quick follow-up.
We think there was some impact across the products and in services. Probably the ones that we saw the most impact on were Mac and wearables. You can see that in those numbers, and probably the least would have been iPhone.
Got it. Very helpful, Tim. And then just a quick follow-up on the Mac. You know, the PC industry is expecting decline in PC shipments this year also. How to think about the Mac relative to kind of like where the PC industry as a whole is expecting the shipments to end up? Is there any color you can give on that? Thank you very much.
The industry is very challenged, as you say. It's the industry is contracting. I think from us though, and I don't know how this year will play out, so I don't want to predict the year. But over the long run, we have a market that is a reasonable size market, a big market, and we have low share, and we have a competitive advantage with Apple Silicon. And so strategically, I think we're well positioned in the market. Albeit I think it will be a little, rough in the short term.
Thanks a lot, Tim.
Yep.
Thanks, Krish. A replay of today's call will be available for 2 weeks on Apple Podcasts, as a webcast on apple.com/investor, and via telephone. The number for the telephone replay is 866-583-1035. Please enter confirmation code 6541285, followed by the #. These replays will be available by approximately 5 p.m. Pacific time today. Members of the press with additional questions can contact Josh Rosenstock at 408-862-1142. Financial analysts can contact me with additional questions at 669-227-2402. Thank you again for joining us.
All right, guys. So that is the Apple earnings call today. Yeah, what do you guys think of it? I mean, listen, I know bears are crying right now. Bring Sarah McLachlan out and, sing in the arms of the angels because the bears are super sad today. Apple is pushed up. It's up about 3.5% right now, despite missing on EPS and sales revenue. Now, there's a few reasons this could be happening. Number one, shorts could be potentially getting squeezed up. I know everybody's like, no, shorts aren't getting squeezed up. But to understand, there's a lot of bears in chat. The power of a lot of people taking one side means that it's really easy to squeeze them up. I'm not saying that's happening. I don't really know. All speculation. And you could say, oh, no, that's not happening. But again, Apple missed on EPS, missed on sales revenue, still up 3.5%. The other way to look at it, maybe, I guess, is inflation's bad. And so with them having lesser numbers, maybe the market goes up. But I don't know if that makes the most sense. Regardless, I think Apple's had a pretty red year. They're still, when they did miss, but they didn't miss by a ton. They were slight misses on EPS and sales revenue. Now that's the worst. They missed more so than anything else. But they missed more so than they have in a few years. But yeah, they are still up about 3.5% right now. So in the end, we'll see what happens. Hovering right around that $150 level. Fahad, I think your name, let me make sure. Your name is Fahad, bro. You've been making me laugh this whole stream, bro. Literal quote from Fahad. He said, "Cement your bold head." end quote, Fahad. Hey, thank you, man. Listen, I appreciate it. Cheers to you. And, yeah, we'll see if Apple continues to push up. Again, I'm not really long. Everybody acts like I'm this huge bull. I mean, I'm not really either. I don't really care which way Apple goes. I'm not holding any Apple at all. I did buy the Ford dip, though, because Ford still has a pretty low PE ratio. And so I did buy Ford. I bought Snapchat a few days ago at like $10. It ripped up to like, where's Snapchat at today? Snapchat is up to 1120s right now. So, you love to see it. We'll see if it continues. And it's all love here. It really is, guys. I'm just messing with you guys. I got to troll the Bears, man. It's all good, guys. It really is. Like I said, it's all good. Fahad, listen, bro. It's all love, man. It's all good, brother. It really is, man. I like I said, we can both have opposing views, and as long as it's not super disrespectful, like I can have fun with it. It's all good, man. But yeah, we'll see what happens with Snap. Tomorrow, guys, we got unemployment dropping tomorrow. Unemployment tomorrow. Also, guys, I think we're going to pivot to a crypto stream. Also, thank you for helping me hit 99,000 today. We broke 99,000 subscribers. We got about 10,000 views for this Apple stream. So thank you guys so much. I appreciate it. We are going to pivot over to a quick crypto stream since we haven't done one yet. So stick around. Don't go anywhere. Thank you, Kay, for the donation, brother. Hold on one second. I will annoy you guys a little bit longer. All right, so sorry, get ready for the crypto stream here. I think we had a stream. No, that one not. I think we could just do like a generic crypto stream. Hold on, let me see what we got. Maybe it's this one. Yeah, there it is. We can just do that. And yeah, bear with me, guys. We're gonna start the crypto stream, bro. My head hurts, bro. My eyes hurt. I've been sitting here for hours. But yeah, give me a second. All right, so let me go ahead and start this crypto stream, and then I'll add the rest of this stuff. But yeah, thank you guys so much for helping me hit 100K. Let me see what else y'all are saying in the chat. Apple at 149.30s here. Thank you, Ren. Shout out to Ren for the $5 donation. I know I might need glasses. I don't know, bro. I'm nearsighted. I can see close up pretty well. Was there an earnings call for Amazon and Google? There was, but we didn't stream it here because, Apple was the biggest one. Everyone give John $1. Hey, thank you, man. Hey, or no. Oh, sorry. That was Ren. Sorry. Thank you. I appreciate it. Y'all don't have to give me $1. I mean, honestly, to believe it or not, this channel makes actually quite a bit of money. I mean, we got 800 people here right now. So, I mean, but I appreciate the support regardless. Anyways, we are going to do a crypto show today. Shout out to Ren. Shout out to Kay. Shout out to anybody else that donated money to me. And I appreciate it. Like I said, regardless of anything that happens here, the market will be fine. Again, the market's green today. The SPY just turned here. So what happened to the SPY just now? What dropped? Something dropped the market. It wasn't Apple. Wasn't Disney. Why did the SPY just tank like this? All of a sudden, look at this drop. Anyways, Apple's still up about 3.5% on the day. Yeah, we'll see if it keeps it up. Hold on one second, guys. We are going to pivot over to a crypto stream. Don't go anywhere. We are going to switch over to a crypto stream today. So don't go. Don't leave. We will be streaming crypto. Again, before you leave, I'm going to give you one more second to hit the subscribe button if you have not already. I definitely appreciate it. We are very close to hitting 100,000 subscribers here. Again, we need like 1,000, less than 1,000 subs to hit 100K. And so I'm definitely not going to pressure you to subscribe, but if you don't, I'll hate you forever. And you got to subscribe right now. Help me get there, guys. Tomorrow we have unemployment data, as well as like a bunch of other stuff tomorrow. So we have unemployment, non-farm payroll data. The opening should be fun. And so this will be a real tell on whether the market is in an inflationary market right now. Or we're in a recession fearing market. You know what I mean? Because when inflation's really bad, economic growth is seen as a negative, right? So in that, is if we get lower unemployment than expected, is the market going to go up? Or are we back to a recession fearing market where, we get unemployment is bad and, low unemployment is good? Again, I don't know which one. But yeah, it'll be interesting to see what we get. So good luck. Again, I'm going to end the stream. As soon as I end it, it's going to immediately pivot you over to our crypto stream. And yeah, we'll see what happens, team. All right, so we're gonna end the stream, and yeah, I'll see you guys over there. I'm not even gonna read the last few. Yeah, everybody makes money and loses money. What about Amazon? All right. Well, the market's not really crashing. Nothing's really crashing today. Again, the SPY is actually up a pretty big percentage. Here's Bitcoin. Again, don't go anywhere. We're gonna go as soon as I end this stream. It should immediately bring you to a crypto stream. If you don't get sent to the crypto channel, here is the crypto link. Again, we're about to start that stream right now. When does aftermarket end? I think 8 o'clock, right? It's something like that. I'm pretty sure it's 8. I might be wrong though. I'm definitely not stalling right now, so I can get my crypto stream ready. I'm definitely not doing that right now. But I'm gonna end the stream. It's immediately gonna bring you over to the crypto stream. And so, like I said, subscribe. Hit the like button, hit the subscribe button. I'll see you guys over there.